Madam Registrar, could you please call the matter?
The Caribbean Court of Justice, Appellate Jurisdiction, on appeal from the Court of Appeal of the Eastern Caribbean Supreme Court, Saint Lucia. CCJ Appeal Number LCCV2025-001. Hearing of the appeal in the matter, the Bank of Nova Scotia and the Comptroller of Inland Revenue. The members of the hearing panel are the Honorable Mr. Justice Anderson, President and Presiding Judge, the Honorable Mr. Justice Barrow, the Honorable Mr. Justice Jamada, the Honorable Madam Justice Anoniwu, the Honorable Mr. Justice Ibu Usuji. Counsel, you may now enter your appearances.
And Your Honours, Barry Atts and Thomas Tibbles for the appellant.
Thank you.
Your Honours, good morning. If it pleases the court, Savioja Snack, appearing on behalf of the respondent in this matter, and appearing with me is my learned colleague, Mr. George K. Sharmai.
Thank you, Counsel, and welcome again to this hearing of the appeal. We hope that you're enjoying the comforts of a newly refurbished courtroom and that the technological progress we have made will enhance your enjoyment and stay with us. I believe the CMC order which went out indicated that you had an hour for the appellant. And unless there are any preliminary matters, we invite you to come forward and present the arguments for the appellant.
Good morning, Your Honours. Once again, this appeal actually concerns two issues. First issue we refer to as the withholding tax issue, and that is whether certain reimbursement payments made by the Bank of Saint Lucia's branch to its head office and related group entities were subject to withholding tax. And the second issue, which we refer to as the deductibility restriction issue, and that is whether interest expenses incurred by BNS should be taken into account in determining the deductibility restriction under Section 39 of the Income Tax Act, or whether such expense should be excluded as a cost of sales. I intend to deal with the deductibility restriction issue, or called cost of sales issue first. And that is for a few reasons. First, it is a discrete point, and it deals with a single provision, and it actually leads us into the section afterward, which is the withholding tax. So in respect of the cost of sales issue, the issue before the court is the proper interpretation of cost of sales as found in Section 39 of the Income Tax Act, which is at the electronic bundle, page 1001 and 1002. I'm not asking you to go to that, but just a reference for you to take a look at some point. So before I delve in, I would like to review the structure and function of Section 39. We've prepared a slide which should be up on the screen in respect of this.
Yes, we have it. Thank you.
That's the formula. Page 2. That's right. Thank you. So what you have before you is a formula that Section 39 deals with, and it's to do with how they calculate certain restrictions on deductions that are otherwise permitted in the Act. So if we look at it, what we will see is that in section 39B and part 1, it deals with 3 types of expenses. These expenses, which we have on the right-hand side, are royalties, management charges, and head office expenses. Now, as you can see from our note or annotation, royalties is a defined term in the Act, and so is management charges. Head office expenses, however, are not defined. The relevance of that will be, we'll delve into that later, but I just want to make that first initial point. Now, element 2 of this formula, and if we look at it on the right-hand side, at B2, deals with 10% of 2 types of deductions exclusive of element 1 expenses. So as you said, it says 10% of deductions exclusive of such charges allowable under 37, excluding cost of sales, and the provisions of section 38.1 other than section, I believe that's a typo, it should be 38.1a, or such higher amount as in the opinion of the controller is reasonable. How it works is that a person carrying on business in Saint Lucia is limited to claiming the lesser of 1 and 2 in this formula. So, some preliminary observations concerning this formula. The higher the amount of cost of sales, which is highlighted in yellow, the higher that amount is the more likely that allowable deductions will be limited by element 2's formula. Now, cost of sales, when we look how it works, cost of sales applies to deductions under section 37 specifically. I refer to this as B on the slide. So you'll see, large B, deductions allowable under section 37 are limited by cost of sales. Then we have C on the slide, which is deductions allowable under section 38.1. Now, given that cost of sales may significantly limit a taxpayer's ability to deduct expenses in computing their assessable income, the issue before the court is, was the Court of Appeal correct to expand cost of sales beyond its historic and well understood technical meaning as relating to sale of goods? So again, the point really being here that if you look at this formula and we see where cost of sales fits into it, the higher that amount will basically, that cost that you have allocated to the cost of sales means the less deductions that will be basically allowable. And as such, your chargeable income will increase. So in that sense, this provision can have a serious effects, negative effects on a taxpayer in terms of computing its profits. So in respect of this first issue, the Bank of Nova Scotia only plans to really make 3 points. The 3 points are that cost of sales is a technical term and historically means costs of goods sold. 2, the commissioners and the Court of Appeal erred when they extended the meaning to something other than the technical and historic meaning. And 3, Parliament never intended for cost of sales to include interest, as is evident from the formula in section 39. Those are the 3 points that I intend to make. So getting straight into it. So dealing with the first one, there is no dispute that cost of sales historically and technically does not apply to banks and is not utilized by financial institutions. That is not in dispute. This observation was made by all levels of court. The commissioners at paragraph 61 of the decision is made that point, and you could find that at the electronic bundle 390. The High Court also accepted that point, and that's paragraph 83 of their decision, of the decision in the High Court, which is the electronic bundle 459. And the Court of Appeal also acknowledged this, and this was at paragraph 50 of its decision at electronic bundle 34.
Counsel, beyond what the tribunals and courts below say on that matter that you're reprising, is there any other authority beyond the Australian High Court case of 1948 or 45? Is there any authority that says that cost of the terminology or the concept of cost of sales do not apply to the business of banking?
Cost of sales, as was recognized by the High Court, is a term, it's a technical term used in the accounting industry. And the finding of the courts is that, and this is just internationally, is that banks, financial institutions do not have a line item of cost of sales when they're preparing their accounts.
Does it depend on the banking institution lining it out in their accounts, calling it cost of sales? So is that a concept that we should be concerned with? What does sales, are we dealing with sales? If we are dealing with sales, are there costs that are used to generate those sales? Isn't that the question?
Respectfully, no, Your Honor, that is not the question. What the issue here is that cost of sales has been historically understood to mean one thing and does not apply to banks. When banks prepare their financial statements, financial statements, there are accounting rules pertaining to how you put it together. Banks don't use that line item.
Do we have evidence of custom to that effect on the record, as in evidence led to say in the industry, this is the generally accepted understanding of that terminology? Do we have it on the record?
Well, we do have the acknowledgements that I just provided from the three levels of court, whereby they've acknowledged that historically it does not apply to banks.
Are we bound by those acknowledgements from the Court of Appeal and the High Court?
You may not be bound to keep in the definition, but at this point, I'm not discussing that aspect. What I'm discussing is that historically, it's a technical term and it doesn't apply to banks.
But when you're talking about historically, that has to be a question of evidence or authoritative meaning accepted in the case law. Is that a way to look at it?
No, I would say it's a matter of, how could I say, just knowledge of the accounting industry and the practice, which, as I said, has been. That's
a question of evidence. If you're going to tell us as counsel that this is what happens in the industry, you are giving evidence, and we will need that evidence on record, brought in the proper way. Do we have it?
No, we do not have anything in the record that, apart from, said the commissioners, my learned friend has stated that the tribunal was a specialist tribunal of accountants. That's my learned friend's position. And they, I will deal with that later, but let's assume that is the case, because my friend has said so, they have recognized that it doesn't apply historically to banks. So that really is the point. So if the question, therefore, is, should it be extended, that will be something I'm going to get to in a moment. But what I'm just saying is, it is not disputed that historically it has not applied to banks, and even the specialist tribunal. has acknowledged this.
Yes, I think we have that point
Right.
clearly in mind. Thank you.
Thank you. Historically, it's had a particular meaning. The matter before this honorable court is whether the Court of Appeal appropriately extended the technical term cost of sales to cover a bank's interest expense. So that is the issue that's before the court at this point, not what the history is, but whether the Court of Appeal appropriately extended the technical term to cover bank's interest expense. Now, while the Court of Appeal did not state this explicitly, in essence, the court dynamically interpreted the term cost of sales in order to incorporate the Bank of Nova Scotia's interest expenses. Now, at paragraphs 14 to 16 of our written submissions, which you'll find at the bundle 2416 to 2417, the bank addresses the concept of dynamic interpretation. Now, in the main, I'm content to rely on those submissions in respect of
What are your paragraphs again in your submissions, please?
to 16.
Counsel, this is your submissions to this court?
Are they reply submissions or the original submissions you made to the court?
Oh, sorry, the original submissions, but they're at page 2416 of the electronic bundle.
Okay.
Also, these are the reply submissions.
Oh,
The reply submissions.
sorry.
Okay, thank you.
Sorry, yes. So, as I said, in the main, I'm content to rely on those submissions in the interest of time. But instead, what I'll refer your honors to in the materials in the bundle of authorities that specifically discuss dynamic interpretation when it should apply. And in that, we have appended a particular source, and I refer you to Construction of Statutes by Ruth Sullivan, and that is at pages 3057 to 3067 of the electronic bundle.
Which edition of her work is this?
I think it's the 7th edition.
Is that the most recent? I know she's very prolific in producing these. Yeah. Is that the most recent edition?
I'll have to get back to you. So the short point is that dynamic interpretation is applied when new circumstances arise that may not have been anticipated during the drafting of the legislation. In such cases, the court seeks to uphold Parliament's intent by considering whether Parliament would have addressed the situation had it foreseen it. That is the essence of the principle of dynamic interpretation. What we're trying to get to the bottom of is, what did Parliament intend? So if there is a particular phrase, and let's say, we're discussing AI or something of that nature, does a particular phrase deal with this situation that wasn't anticipated? And what we're trying to explore is, what did Parliament originally intend? Would they have said, had they contemplated, yes, this applies? An example, for example, being something like a document at one point means paper, and then is it electronic? Is that included at some point in time? And the exercise is considering, that's the exercise.
May I ask you, Counsel, did this specific issue come up before? Any courts, certainly in the Caribbean, in Saint Lucia, as far as you're aware? The issue as to what was the meaning of cost of sales?
As far as I'm aware.
As far as you're aware, then, this is the first opportunity that the court had to address this point?
I'm not aware of any other case.
Yes. Okay.
Counsel, I just want to be clear on something. Are you suggesting, based on the interpretation you're adopting, that the term cost of sales cannot apply to an entity that provides services? You've been very specific. You've said the technical term is cost of goods sold. You've also submitted that this term has not historically applied to banks, a specific type of service provider, and to their expenses, to their interest expenses. Are you suggesting to the court that in this statutory framework, the term cost of sales cannot apply to an entity that provides services?
I am not saying that. I'm not making such a broad statement. What I am just saying is that there is a meaning that's historically, and it has not applied to banks. Is specifically what I'm saying, and has not applied to the interest expense of banks.
But the technical term you're advocating is one that will have the effect of limiting the meaning of the term to only entities that produce goods, because you are advocating, as I understand it in your submissions, a meaning that is cost of goods sold. So I understand that you haven't made that point in your first two set of submissions, but I'm trying to understand, as we are now seeking to give meaning to the term, whether you believe this is a term that has only application to an entity that sells goods,
Well,
products.
I know traditionally it is manufacturing and kind of retail companies that will have cost of sales. So there may be in some of those industries, and I cannot say because I'm not an expert on that, that maybe that depending on the nature of their business, that there may be a degree of cost of sales in there, perhaps. But I'm really limiting my submission to, we know historically it hasn't applied to interest expense in the bank. That is really my submission. I'm not speaking to every other situation at this point.
And just to be clear, in your submissions, you're not making any submission relating to its meaning beyond what it has historically meant.
Yeah, my first point is historically, the historical application to the situation that is before you today.
Counsel, on that note, paragraph 63.3, I believe that could be what we're looking at here, of your submissions. Paragraph 63.3 says, quote, BNS does not have any sales or cost of sales as reflected by its financial reporting, unquote. The point there is that you're saying BNS does not have any sales or cost of sales as reflected in its financial reporting. The point being, BNS, Bank of Nova Scotia does not engage in the business of selling things. Therefore, cost of sales does not apply as a concept to it. Is that the understanding?
Well, if I could answer it perhaps this way. Banks have always been here. The nature of banking hasn't changed. And it is now that the revenue is taking the position that interest expenses should be included in cost of sales. So the point I'm making is what is happening, what is being proposed is a change from the history. That is what I'm proposing. So, and even the case you referred to, I believe it was a 1948 case, recognized that in 1948, even how banking business works. So,
and the Court of Appeal disagreed with that.
Yes, the Court of Appeal disagreed with that. But what I'm saying is what the Court of Appeal has done, they are using a process of dynamic interpretation in order to bring something which historically was not traditionally understood to be cost of sales. They're suggesting there was no good reason that...
Counsel, as I understand it, your position, I think, is simply this, that the court ought not to have done that because Parliament could have done it because the historical meaning was well established and well known. Parliament did not do it, and therefore this is not something that is new or that has arisen newly that requires an intervention by the courts.
Yes, Your Honor.
That is your criticism of the Court of Appeal. The rule of dynamic interpretation does not apply in this case because this was an expression known and in existence and well established, and so there was nothing new to apply a dynamic interpretation, i.e., banks always had interest expenses and they were never a line item in their accounting. And so why would you be doing it now unless you are overreaching to interfere when Parliament intentionally did not include it?
Yes, Your Honor.
Good, I understand. Thank you.
How does that comport with the notion that once the common law is declared, it is a law which has existed prior to its declaration? You have said that as far as you're aware, there is no case which has considered this issue. So the interpretation given by the Court of Appeal does not go contrary to any established precedent. Why in that circumstance ought not the Court of Appeal to interpret the law as far as it's concerned in accordance with the statute that it is looking at, particularly Section 39, and why is that interpretation not to be regarded as the interpretation that is always given to Section 39?
The short point is there are rules guiding when you can depart from a technical meaning that has been historically accepted. And if the court has acted in accordance with those rules, then it is fine. We're at this stage, before this court, what we are saying is that there has been a historical meaning, it has been a technical term, there are guidance in terms of when you should change that meaning. And if you don't follow those legal steps, then it is an error of law. That is the position.
And that's what you say Professor Sullivan is saying in her book.
So now, in terms of the rationale given, hold on one second. So what I am saying, so the Court of Appeal's rationale, at paragraph 52 of the Court of Appeal decision, there is no discussion of Parliament's original intention, which, as I've said, is what the exercise of dynamic interpretation is. But at section 52, which is an electronic bundle 34 to 35, there is no discussion of Parliament's original intent. Instead, the court reasoned that in contemporary contexts, there is no principled justification for restricting the term sale exclusively to goods. In response to this, the BNS says...
Can I just, was there any evidence as to what is, to ground that statement by the Court of Appeal? This idea that in contemporary business terms, there's nothing to restrict it. Was there any evidence led about in the market that this is what is the contemporary use or experience?
This was in the decision. It was not in any submission made to the court.
I mean, not supported by any evidence?
Not supported by any evidence that was presented.
Yeah. Okay, good, thank you.
So in response to the Court of Appeal's rationale, we say there is in fact a compelling justification for excluding the bank's interest expenses from cost of sales. Namely, Section 31I of the Income Tax Act specifically permits a deduction of interest expenses without restriction. I would like to refer you to Section 38(1)(I) at this point, It is at the bundle at page 998.
Thirty-eight one I, you said?
Yes.
All right, hold on, let me just turn it up here. 1 second. HIJKHI.
So once again, it's at page 998.
Any expenditure incurred during the year of income by way of interest? Is that the paragraph? Is that the?
That is the paragraph.
Yeah, okay, good, I got it.
So paragraph I, and we go to the, if we just go to page 996 briefly, you'll see it's part of section 38, which is entitled specific deductions allowable. And then you'll notice paragraph 37, it says general deductions allowable. So once again, paragraph I is a specific deduction that is allowable. So I would like to go back to the formula that is on the screen. The statutory formula in section 39 only permits, if we look at the deduction there, at the schedule, only permits cost of sales to reduce general deductions under section 37 of the Income Tax Act. You will note that it doesn't exclude cost of sales from section 38 deductions. As a result, if cost of sales is dynamically interpreted to encompass interest expenses, this would effectively result in a general provision taking precedence over a specific provision. This is the very opposite of how statutes are to be interpreted and applied. In Benyon, which is also in our materials, this is explicitly addressed. And you could find it, I'll read it for you, but it is an electronic bundle 3076 to 3077. So at 21.4 of the section, it says, it is a principle of construction that in the absence of any contrary intention, the general gives way to the specific, where the literal meaning of a general enactment covers a situation for which specific provision is made by some other enactment within the act or instrument, it is presumed that the situation was intended to be dealt with by the specific provision.
Counsel, just assist me with something. So you are arguing that because interest is specifically addressed in section 38(1)(I), that represents how Parliament intended to address the question of whether interest was an allowable deduction. Is that your argument?
My argument is, if interest expense is included as a specific deduction in section 38, then it's not cost of sales for the purposes of section 37.
In a particular context, which is expenditure incurred by way of interest on a loan. But isn't the argument we're dealing with a different type of interest, which is the interest that the bank pays on deposits? So in other words, I want to ensure we're not conflating two things here. Yes, interest is addressed in subparagraph I, but that is interest that's paid on a loan taken out by the taxpayer, no? It says expenditure incurred during the year of income by way of interest on any loan made to that person. So that's interest which is charged on a loan that would have been issued to the person in question. The issue that the court is trying to engage is whether interest that a bank pays to deposit holders can be considered to be cost of sales. That is, if cost of sales is understood to apply to a service provider like a bank. In other words, that's a cost incurred in providing the service it extends to its customers. That's why I kind of asked earlier the question of whether conceptually the submissions of BNS is essentially, look, cost of sales is a historically understood term to mean cost of goods sold. So we're only dealing with the costs that are incurred in selling goods. But if it can extend to a service provider and it can be understood to be the cost of providing the service, what I'm trying to understand is what in the legislative framework precludes that understanding. You're pointing us to subparagraph I, 1I of section 38, but that's not the type of interest that we're exploring in this particular scenario here. It's not interest paid on a loan issued to the person. The question is whether the interest that is paid by the bank to depositors can be understood to be part of the cost of providing the service, the banking service, and therefore whether there's anything in the statute that precludes that understanding of cost of sales.
Well, leaving for a moment section 38, 1I, and just to address the question in a wider context, I believe right now we get back to the same issue that we had stated before. And the issue that we had stated before is the business of banking hasn't changed.
Isn't that broader conceptualization you're making of the thing that could be something you need to persuade people on? You're going to the broader conceptualization, which takes us to your paragraph 30, 63.3. Let's say the bank doesn't sell things, therefore bank doesn't have cost of sales, as the bank's annual reports would indicate. That is a broad conception. Does that serve your submissions, or to narrow the point, going back to your 38.1I, to say, well, regardless of the broad conception, according to your view, 38.1I singles out interest on a loan and say that may be deducted. So your argument that becomes to convince the panel that deposits paid on interest on deposits equals interest on a loan to the bank, which is a narrow point, and instead of the bigger, broader concept. I don't know, it's your argument, I'm asking you.
No, I recognize this. I recognize the distinction there, one that I have not considered deeply. So that is the reason why what I'm saying at this point is we can still address the issue under the general principles of dynamic interpretation, irrespective of that specific issue.
I am particularly interested in that dynamic interpretation where you're taking it, and you say the Court of Appeal was wrong to have done dynamic interpretation, and the question was whether there was evidence upon which the Court of Appeal could have done that, and you say no. But are judges entitled to take judicial notice of what happens in the business world? And the second question is, you mentioned the bank's annual report. The bank's annual report talks a lot about instances where the bank's doing sales, sales teams, sales operations and all that. What is that all about if the bank doesn't sell anything? Going by your general conception of cost of sales.
Counsel, after you respond to my brother, I would invite you to consider moving on because time is going. Yes.
In terms of answering that question, just to give an example, refer you to page 2168.
Can you just repeat that for us quickly, please?
2168.
Yeah, okay.
So this document has been included in the bundle just to show how cost of sales is applied even not just in the Caribbean, but globally. So this is a document from a guidance document from the IRS. And if we look at on the beginning of the second paragraph, it says, this chapter applies to you. This is how to figure out cost of goods sold. This chapter applies to you if you are a manufacturer, wholesaler, or retailer, or if you are engaged in any business that makes, buys, or sells goods to produce income. This chapter does not apply to a personal service business, such as the business of a doctor, lawyer, carpenter, or painter. Now, I'm just referencing that just to, again, confirm that cost of sales does have a historical meaning, does have a technical meaning, and that what is being suggested here isn't something that isn't applied internationally. So what we are doing here is the Court of Appeal, again, without the benefit of submissions on the point, without the benefit of any specific evidence, has made this dynamic interpretation, again, not considering the implications and not considering why internationally we don't extend it. Now, I mean, I could only surmise why we don't just extend it as far as to service companies, because if you are in a service company and that is considered a sale, one would then wonder what is not cost of sales under a circumstance of that nature. So it's those type of questions kind of would justify why a decision of this nature probably is better left to Parliament. And again, that is the basis upon which the dynamic interpretation rules. And in Sullivan, they specifically said, don't second guess Parliament's intention.
Counsel, since more than half your time has gone and you're still on the secondary point, may I invite you to move on to the primary point you want to discuss with us?
The withholding tax issue. And I just want to conceptualize it before I get into the points. So the bank made payments to head office and referred to them as head office expenses. The bank states that these...
who refers to them as that? You said you are referring to them as head office?
Yes, it has always been referred to as head office expenses in the document. So that's what I'm saying.
Okay.
So the bank states, but I'm also phrasing it that way because I know there's a degree of skepticism, and I'm going to get to that. So the bank states that these payments were reimbursements for shared office costs incurred by the head office outside of Saint Lucia's jurisdiction. BNS's position is that withholding tax is not applicable on reimbursements received by non-residents for expenses they incur outside of the jurisdiction. BNS maintains that withholding tax constitutes a levy on income, whereas a reimbursement does not represent income to the non-resident recipient. Furthermore, as the relevant costs pertain to activities conducted outside of Saint Lucia, BNS alternatively contends that any associated income earned by the non-resident from these receipts originates beyond Saint Lucia's jurisdiction and consequently should not be taxed in Saint Lucia. The tenor of the respondent's submissions are that the bank's characterization of the payments is primarily a matter of semantics. The respondent's position is that what the bank refers to as a reimbursement of expenses to head office on its behalf is in fact properly classified as a management charge for the purposes of the Income Tax Act. Furthermore, from the revenue's perspective, it's entirely immaterial whether or not the activities giving rise to the charge from the non-resident emanated from activities emanating from outside of Saint Lucia in the ordinary course of the non-residents' trading operations. To them, that's an irrelevant thing. The courts below agreed with the respondent on both those issues. So while there are two central issues that I've just raised, one you could say is the jurisdictional issue, and the other, is in terms of the reimbursement classification. Even though the two issues, our submissions on this matter are organized into 4 points, 4 sections. Now, this structure reflects our view of what happened in the courts below, and that's the reason why we've done it into 4. And I'll explain. The lower courts conflated management charges with head office expenses and reimbursements. As such, what we have to do is kind of dissect those terms and bring them before the court so that we can address the concern of the respondents. So BNS will clarify, or aims to clarify, that the dispute between the parties is really a matter of substance and not a matter of semantics. So the 4 points are on the screen. That is, head office expenses are not management charges. A reimbursement of expenses is not a charge for the provision of services. The third point is that definitions matter. My only point is that there is a definition. So now I'd like to show you how Section 39 was amended afterwards, and it's at the bottom right. And you'll see here that it says Section 37, where a person carrying on business in Saint Lucia incurs expenditure by way of, same paragraph, which we know is royalties, and management charges. And now it's added, or by way of head office expenses. So as you can see, but as I mentioned, actually I've said this before, these two terms have been defined in the statute, but head office expenses are not. I submit that it is reasonable to conclude, based on this, that head office expenses are not synonymous with either management charges or royalties. They are a third animal. The term most likely refers to a different category of costs. As such, the distinction between head office expenses and management charges is not considered a matter of semantics by Parliament, and I respectfully urge this court to not consider it a matter of semantics, but to consider it a matter of substance. So the issue before the court is whether the amounts defined in our written submissions as head office expenses were management charges subject to withholding tax, subject to withholding tax as asserted by the respondent, or whether the head office expenses were not subject to withholding tax as asserted by BNS. We say that the amounts at issue in this appeal were, in fact, head office expenses, as that term is used in contrast to management charges in Section 39. So I want to...
Just to be clear at this point, head office expenses are not defined. Management charges are management services, technical services, personal services.
Correct.
Correct?
Correct.
Without saying what management or services means. The definition in the Act simply says management services, technical services, personal services, but does not go further to say what either management or services means. Accepted?
Accepted.
Right. But the Act also, and I should say the Act also does not at all attempt to define head office expenses.
Yes.
Right. So that in 2007, the Section 39 includes as a discrete category head office expenses, but does not amend Section 2 to define it.
Correct.
Agreed? Okay, good.
So following on from that, could we agree then that if something is management charges as defined in Section 2, clearly it is not head office expenses?
Yes.
Okay.
That is my position.
Yes. All right. So it's really a matter then of deciding on the services which were provided by BNS Canada and what bucket they would fall into, whether head office expenses or management services.
As I had started with the roadmap for this section, even though there are two issues, we've broken it down into four, and there's a reason for that. Because the conflation is between head office expenses, reimbursements as well. And what I'm trying to do is at this point just dissect and isolate what head office expenses means. And I'm going to get to that right now. Now, on our, again, from findings found by the court below and so on, we can now just look at what the issues were that gave rise to the charges. These amounts reflected the branch's share of costs of certain activities incurred at the group level. That is to say, that to the extent BNS made payments of these amounts, they were reimbursements of expenses incurred by non-residents on the branch's behalf. The allocation of those head office expenses associated with activities of the head office and other branches did not arise for the provision of services to the branch, but rather reflected an allocation of head office expenses in accordance with well-accepted accounting principles in respect to branch accounting. This submission that I just made there is consistent with the reasoning of the court in international computers. And we're going to get into the international computers case. I believe it is a very important case to establish the point. The international computers case is at page 2460 of the bundle. So to summarize, the facts of this case. Sorry?
Page 2416.
2460.
60, thank you.
So the material fact.
No, so just on, this is an area that I am very interested in hearing you on, and of course the other side. So part of what I want to hear you on is what happened before the commissioners forensically on this. So clearly there was the issue as you've stated it was addressed with a conclusion that what you call shared cost incurred at a group level, your reimbursement, being management charges. Agreed? That was the conclusion.
Yes, the conclusion was that those management charges.
Correct. For the provision of management and technical services. Okay. What I'm interested in hearing is what was the evidence beyond the assertion of, I think it's a paragraph that says this is what was it. These are things that are illustrative of what it was. At least that's my understanding of the evidence. So what I really want to also get help on is what was the evidence and what was the forensic exercise undertaken by the commissioners and or the other courts in determining why, not that these are, but why these should be, one or the other, in their opinions, management charges. Apart from just saying that they are management services and technical services, I'm interested in what is the evidence, the forensic analysis that leads to that. If it is there.
There is, and this is BNS's case, that there wasn't that was not done. Instead, what was done is a kind of a presumption that as long as there is, this is the unspoken presumption, as long as there is payments going between a related company, it falls under a bucket called management charges. Notwithstanding that the definition of management charges says nothing to do with related company payments. But that is the bucket. So if these payments were made to a third party, for example, then it's most unlikely that the revenue would have considered to classify them as management charges. So I said there was no forensic evidence. What we have before us is there's the evidence that was provided by BNS of the service.
Sorry, Counsel, let me interrupt you. You said if they had been made to a third party, then what?
What I'm saying is...
No, repeat that proposition. If they had been made to a third party, then it is unlikely that they would have been considered management charges.
It appears that the practice is, and this is what I'm just suggesting, I'm observing, that when that you see something passing between related companies, the presumption is, we just put that in the bucket called management charges without doing any forensic analysis into it.
No, I understand what you're saying. What I'm trying to do is to sort of tease out the distinction between the two things.
Right.
Hold on.
Sorry.
If it had been made to a third party, then the likelihood of the provision of these services attracting a charge, as in remuneration or compensation for the provision of these services, would have been distinctly there. But when they are made by one branch to a head office, and it is claimed that the head office is not charging or not seeking compensation for the provision of the service, but rather is seeking to be made good for what it has cost the head office, then that seems to me to be a separate thing. Is that your understanding?
My understanding is that there is a difference between these two concepts. And the case law has looked into it, even in the context of a branch and a head office, and has explained how you distinguish between head office expense and a reimbursement from a management charge. And I would like to show you how they make that distinction. And so Right, sorry. So again, back to the International Computers case. So I've just mentioned what the facts were of that there's a branch in the head office, and the latter, the branch, had been charged with a comparative share of executive and general administration expenses in proportion to its revenue to the total of the group. Those were the facts found. And concerning the character of these expenses, the court found as follows, and this is at page 2472, but I'll quote it for you, found, we turn our attention to the nature of the services said to have been supplied by the head office to the branch. We have found these to represent a proportionate share of certain administrative expenses incurred by the head office and reimbursable by the branch. Now, the relevant legislative provision that was before the court for consideration can be found at 2464 of the electronic bundle. Now, what
Case you just referred to, can you say what the services were in that case? Were they the same as the ones that are here?
What, as the facts that I've just said to you, which were summarized at 2468, is how we've described our facts. It's the same, which is why I'm using this case as an example. It was a situation where there was a share of group expenditure that was charged down to the branch. Because again, in accordance with certain principles of branch accounting, this is what you do. So this was an example of where the revenue was faced with the same scenario, and their position was, we think it's management charges. We don't think it's...
It is computer support. It is assistance with risk analysis. It is legal advice. All of these things were involved in the International Computers case. Is that what you're saying?
Well, we could probably, if we go to the
I'm just
to the
seeking
facts,
clarification, yeah.
we could probably, we'll see all the things that were listed there. If you would like me to take you to that,
I
we
was
can.
hoping Mr. Tibbles would put it on the screen, but it seems that he thinks we should look at it in our bundle.
Okay, what I could get to, I can show you some of the analysis. We could bring up the International Computers one. While Mr. Tibbles finds this, I'll just continue if I may. So in that case, the formulation of management charges that was used, no, okay. That was the slide. The formulation of management charges, in the interest of time, I will just make the point that there were two, yes, this one here. I'm just comparing, this slide compares the international, I was going to get to this at the end, but just, for the sake of, so you could see. You will see on the left-hand side what evidence was in International Computers. And then you'll see on the right the facts of the BNS case that were found that are equivalent. So you will see, for example, that the finding was that there's an absorption of executive and administrative head office expenses. And you'll see on the right, paragraph 18 was found by the High Court. There was an absorption of executive expenses in international bank expenses and only apportioned costs. Again, as we know, an International Computers, proportionate part of expenses reimbursable by the branch. So the comparison is here. Now, what I'm saying is, in that case, the provision that was in question, the management charge provision that was in question, is identical to Saint Lucia's management charge provision as it existed in 2006 and prior. And I would like to take you to 3152 just to confirm this. You could take a look, and then we'll just show you it's exactly the same provision that was being considered. So if you were to compare 2464 and 3152, you will see Trinidad's version at that point in time compared with St. Lucia's version, and you will see they are identical.
Is that one of your slides? No?
No, it's
No,
not.
all right,
It's
okay.
not one of
So
the
we have to
slides.
turn it up, okay, good.
So I was just giving you the page reference. Perhaps you could, Thomas, you'll be able to.
Counsel, while that's being done, I just have a question here. So when one reads section 76(1)(b) of the Act in conjunction with paragraph 1 of Schedule 3, the Act actually makes that cross-reference. I'm just pulling it up for myself. What one leaves with is the impression that there can be payments made by a branch to a non-resident head office in respect of the matters covered by paragraph 1 of the schedule. So what I wanted to understand is, are there circumstances where a branch could make a payment to a head office in respect of the provision of management services, technical services, or personal services, I think is the term used in the Act?
The short answer would be yes. Now, I would like to just elaborate on that. Obviously, it depends on your legislation, right? But if the statutory fiction exists that the branch and head office are two separate people, then yes. And what I would say to you is that fact also exists in international computers. There was that fiction. In fact, it was a stronger fiction than even exists in Saint Lucia. Because in Saint Lucia, what section 76(1)(b) does is say that there can be a payment between a branch and head office. That's all it says. It doesn't say that there can be services between the two. It doesn't say that. This is something that one must imply and take from it. It doesn't say that, it didn't redefine the definition of person to conflate the two. In fact, it's apparent if you look at section 76 that a branch, if you look at B and compare it to A, you'll realize that a branch and a head office are in fact separate. In the international computers case, the fiction, there was a fiction that existed because there was a treaty consideration. And under the treaty, there was this distinction made where the branch is treated as an independent entity to the head office. So it's even stronger in this case than section 76(1)(b), and I was going to get to that.
One includes a cross-reference to Schedule 3 that lists the types of payments that are applicable. So I don't think Section 76 relates to any payment. Because of the reference to Schedule 3, it's certain types of payments that are made by a branch to a non-resident head office. What I'm specifically trying to work through, I think you said yes before, and I want to explore it. The Act therefore contemplates, you're calling it a fiction, because we know a branch and a head office aren't technically separate legal entities. But the branch is intending to provide for the deduction of withholding tax when a branch makes certain specified payments to its head office, to a non-resident head office. One of those is management charges. You explained the term management charges is defined. So it is therefore possible in the schema of the Act that a branch could make a payment to a non-resident head office.
Expenses and management charges.
Yes, and Parliament makes that distinction in
Parliament makes that
Section
distinction.
39.
So the Parliament has told us what management charges mean.
Parliament has defined them.
All right, but doesn't define head office expenses.
Correct.
Is it possible that head office expenses could be a broader concept, broader than management services? For instance,
Well,
head office expenses, hear me out.
well, I'll answer it like this.
Did you say yes?
I would
Let
say
me
that
lay
they are
it
not,
out
I would
first,
say
and
head
then-
office expenses are not services, are not,
Hold on a minute, and then you can reply in the round. Is it possible that a conception of head office expenses could mean head office decides, all right, our old building is no longer suitable for us, we're going to build a brand new building, multi-story building, because this services everybody. Everybody needs to contribute to this. Or, well, it may not be that. Could be that our existing building is good enough, but it needs a new roof. So we are going to put a new roof to head office expense. Or we want to put on a new big computer server in our system that serves everybody. Those would be head office expenses, would they not be?
yeah, I would say so, yeah.
And that's different from provision of technical services as part of what's defined as management charges.
Technical services also has a meaning, and it was addressed by Justice de la Bastide in the Selwyn Young case. When he was at that point in time, the CJ of the Court of Appeal prior to being elevated to this honorable bench. And in that case, technical services were defined, management services were defined, personal services were defined. I would be getting into that later on in the submission. But for the
You seem, Council, to think you have a lot of time available to you.
So the ICL case, I'll just say what the ICL case therefore stands for. The International Computers case is not an authority for the proposition that a head office cannot provide services to a branch. That's not what it stands for. International Computers is authority for the proposition that the absorption of executive and administrative head office expenses in accordance with well-recognized accounting principles in regard to accounts is not a management charge as defined in the Income Tax Act. That is what it is.
Could you just repeat that summary, please?
The absorption of executive and administrative head office expenses in accordance with well-recognized accounting principles in regards to accounts is not a management charge as defined in the Income Tax Act.
Sorry, you constantly speak about what it is not. Are you going to tell us at some point what it is? What is a management charge in your view? What is a management charge? Yes.
Yes, after I did this, I was going to get, okay, a management charge, there are a couple of criteria for management charge if we look at the section. First of all, it has to be a charge for provision of a service. Now, that's important. And then it has to fall within a bucket. Now, being as a submission is, and the case law supports this, is that a reimbursement by very nature is not compensation for a service. Now, I could get to the case law on that, because I was going to get to it. So the case would be the Owen v. Poot case. And in this case, I just want to give you the reference. The reference is 2505. of the bundle. And this case articulates the difference between a reimbursement which is not in the nature of income, or not of an income nature, and why the distinction between a charge for the provision of a service and a reimbursement underlies the distinction between management charges and head office expenses. Because as I said, I broke it down into three because the essence, the nature of a head office expense is that it's a reimbursement. And a reimbursement is distinguished in the case law from compensation for the provision of a service. Now, so we'll just go to that case. The issue in this case, and you could find this at 2508, was whether amounts received by the taxpayer as reimbursement for expenses in traveling between hospital locations, were emoluments. The taxpayer in this situation was a doctor and had to travel in between. So had received a reimbursement for expenses incurred. The issue before the court in this case, was whether or not the amounts received from the employer in respect of that constituted emolument income, or whether, as in a reward for services, or whether it was a reimbursement, which is a different animal. I'm inviting the court to substitute, just for the sake of, for the present purposes, to see the analogy, to substitute the word emolument with service income. Right? Just look at that because it's essentially the same concept. Is it your salary? Is it your business income? Is it management charge fee? So substitute for the sake of let's looking at this case to get the distinction between the two. Owen v. Pook at 2505. Yes, it is. Is it at 2505?
You said 2505, did you?
It's not.
2505?
Okay, let me just confirm. My notes say it is. Perhaps I mistyped it. Yes, it's 2505 of the electronic bundle. Page?
Council, it would be
Is it-
helpful
is it-
for
if you can, submission.
logistical purposes for you to have these things ready, either as handouts next time you do these things, or show them on your
Yeah, I am.
heads up.
Perhaps, Mr. Tibbles, you'll find the reference in our written submissions, because it is in our initial written submissions. There will be, it would have been
It
referenced.
is there, just that not everybody can get at it at the same time.
Okay. But is 2505 before the court? Are you able to see the case?
Say I was going on the
Can you put it on the screen?
creditworthiness of your word without actually going to the case.
That was a case where a doctor
Yes.
Yeah.
tried to deduct mileage for attending to hospitals
Yes.
and that sort of thing. And initially, revenue said, no, you cannot deduct that, and the appeals court says you can.
Well, it was more whether it should be treated as his income when he received the reimbursement from the employer. That was the issue before the court. So there's a couple of critical judgments in this case in order to set out what the nature of a reimbursement is as opposed to compensation for the provision of a service. And Lord Guest refers to this at 2510 of the bundle. I'll quote it for you. He says, if the proper test is whether the sum is a reward for services, then in my view, the traveling allowances paid to the taxpayer are not emoluments. To say that the taxpayer is to that extent better off is not the point. The allowances were used to fill a hole in his emoluments by his expenditure on travel. Now, we submit that ONV POOC stands for the proposition that a reimbursement is distinguishable from a charge for the provision of a service. And we have another couple of cases, but I want to get back to ONV POOC, but another couple of cases. There's the Weyerhaeuser case, which is in the bundle. And I want you to take you specifically to paragraph 6. To paragraph 6 in the Weyerhaeuser case, which is at 1843 of the bundle. And it says, the plain meaning of the words fees, commissions, or other amounts for services embraces amounts paid for the services, but not the reimbursement of expenses incurred by the provider of the services in the course of providing them. In normal parlance, the words for services denote an amount paid as a fee or other remuneration rather than an amount that is a reimbursement of an out-of-pocket expense. We also have another case in the bundle, which is the State Farm case, and I want to also note that. And that would, you'd find that reference, electronic bundle 1869. And even though the court didn't have reason to finally decide the issue, what was said by the tax court there was that there was considerable merit to the argument that the allocation of expenses by head office does not constitute consideration for a service that is rendered by the head office to the Canadian branch. And that reference specifically would be at paragraph 89 at electronic bundle 1892. So really, it may be difficult to apply what's the concept of when a reimbursement happens as opposed to when it's a provision for a service. But the point I'm really making here is there is in fact a line between the two things. So the question is, when does we cross the line? And I said before, I wanted to go back to the decision in ONV POOC because I think the dissenting judge in that case actually provided some very helpful analysis. So even though the majority in that case found that it was not income because it was a reimbursement, he didn't think so. He thought, in fact, it was a provision for services. And I find his judgment is very helpful because, understand, my friend is skeptical that we're calling something that it isn't. So that's why we need to drill down to what a reimbursement is from what a reimbursement is not. So in the ONV POOC case, it's the dissenting judgment of Lord Pearson specifically that I would like to refer you to. Because his reasoning in this case for why he did not agree is at page 2519 of the bundle. And it's paragraph, maybe the beginning of the third paragraph on that page, where it says the other question in the appeal, right. So he dissents on this point. Now, his analysis is very interesting because he distinguishes two types of reimbursement. He distinguishes it, one type of reimbursement is where let's say you're going to work and you're incurring an expense, and then you are reimbursed for that expense. He says, well, if other people are not reimbursed in that situation, then then that should be treated as income. That shouldn't be treated as a reimbursement. And he thought that's what applied in this case. But he said the situation would be different if your expense essentially was somebody else's expense and you got the reimbursement there. So in other words, he made a distinction between when it is your own expenditure or your own duty that you spent and got money back from somebody else, or whether you spent it on behalf of somebody else. He said he thought if it falls into the latter bucket, it falls into the latter bucket, he thinks that is a reimbursement, and he thought the facts in this case fell into the first bucket. Now, the reason why I say his decision is very interesting is because what you're doing, therefore, is looking at things from the perspective of the person who received the funds. And you're looking at it whether, when they received it, did they spend something on behalf of somebody else, or whether they were being reimbursed for their own expense, so to speak, right? On our facts, from the evidence that's been found by the High Court between, and this is at paragraphs 14 to 16 of the High Court decision. I could take you there. But when you see there, it is quite clear, as long as we are sticking with the logic that the head office and branch are separate, it's quite clear from the facts found there that what the head office was being reimbursed for were the branch's expenses. And so even using Lord Pearson's dissenting logic, Lord Pearson would have said in our facts, that is the kind of reimbursement that is not a reward for the payment of services. And that is why I find his decision particularly interesting and why I brought it to your attention. Because what we're saying here is even in situations that one must be is skeptical, and you want to use the hardest, most stringent test, and you wanted to use Lord Pearson's test, then on our facts, we classify as a reimbursement.
You say that what head office was being reimbursed for were the branch's expenses in this case?
Yes.
And just take me back to Lord Pearson's, how did he reason? You don't need to read it, just articulate it for me.
Right.
He says that if you are getting payment for something that is exclusive to you, it's not a reimbursement.
Yeah, he was saying that if he was distinguishing, I said, between some expense you always have to do for your own benefit, so to speak, and whereby there was no benefit to you, so to speak, in this expenditure, and the person whose benefit it was reimbursed you for the expense that you incurred. That was the two situations he was trying to distinguish. And from his perspective, the former situation is not a reimbursement, but the latter is. The majority did not reason that way, but that's how he reasoned. But I'm bringing his reasoning to this court's attention because those are the facts of our case. To say that even Lord Pearson would have been satisfied in our circumstances.
How did the majority make the distinction? What was the test they used? This was the test that Lord Pearson used.
Right.
What was the test of the majority?
The test was set out by Lord Guest at 2510. And I read it earlier, but
Yeah.
he said, with this reward for services, and in his position, his perspective, it didn't matter if you were better off or not.
Right.
As far as he was concerned, it was used to fill a hole in your emoluments, and therefore.
There was a case, I think it's Commissioner of Inland Revenue versus British Salmon Aero Engines Limited, 1938. I don't think you cited it, but it is mine, where Sir Wilfred Green, Master of the Rolls, says this, quote, "In many cases, it is almost true to say that the spin of a coin would decide the matter almost as satisfactorily as an attempt to find reason," unquote. So according to him, in all these tax cases, you might as well toss a coin. But rather than toss a coin or spin a coin to decide the matter, is it possible for us to zoom out a bit and look at possibly what the legislator is doing with the income tax?
Sorry, pardon me? I didn't hear the last part.
I'm saying if we can sort of zoom out a bit, basically rescue ourselves from the weeds, from the forest of all these issues, and take a broader look, try to see the forest for the trees. Here I'm looking at section 76 that is pivotal to this case. What is section 76 telling us? Is it possible for us to derive a view of what section 76 is trying to do by looking at where it is in its context? And that is part 7 of the Income Tax Act. Part 7. You look at part 7, you see section 76, section 77, section 78. Those are special provisions according to part 7, special quote-unquote provisions applicable to certain taxpayers. Section 76 tells us applicable to branch office making payment to head office, non-resident, right? Section 77 talks about deducting taxes from payroll, employer paying to employee, you need to deduct taxes. Section 78, the same thing, paying to a contractor, you need to deduct taxes. So those are not really income in the context of Owen v. Pook, as we're debating here. You move away from that scheme in part 5, and you think about a lot of other instances where the taxing authorities or the legislator imposes taxes on people in circumstances that are not income. You're buying property, and they say you must pay stamp duty on the property. You are the one making payment, and yet you have to pay stamp duty on it. Goods and services taxes you pay, import duties, and so on it goes. So the question becomes, must we look at this whole thing from the perspective of, is this profitable income that's being taxed? Is it reimbursement? Is it all that? Is it possible to look at it, okay, what is the legislator saying here? Has the legislator made it very clear that they want to withhold taxes from certain payments being made?
Income tax is obviously distinguishable from other forms of taxes, because by nature, it's a tax on income. Now, therefore, what we're looking at is that. Now, in terms of the withholding tax context specifically, if we even turn to, I don't have the reference, but we could find it. It will be section 116 of the Income Tax Act.
Councillor, I think
1067.
we will have to wrap up pretty soon.
Okay. Essentially, but to deal with that point, 167? Okay. 116, subsection C, and it is on page 1067 of the electronic bundle. 116 Act, 116 of the Saint Lucia Income Tax Act. It is clear from that section, and there are others, that even when section 7(6) applies, this is a payment of income to the non-resident. So I'm just making the point that it is a payment of income. Reimbursements are not caught, but the point also of these cases is that we have to look at whether the payment is, not that I'm a Latin specialist, whether it's qua service or qua something else. And that's the distinction that the cases are making. And when it's a head office expense, it is not qua service. Now, I won't take you to time is not with us, but I would also say that in this case, the Tax Court of Canada, in the State Farm case, and I may have given you the reference for that, there was extensive analysis in that case concerning how to make certain distinctions in that regard, and it's helpful. Now, there are some distinguishing fact features in there, but nonetheless, there is a distinction between qua payment for a service and whether something is a reimbursement, and that's the point.
If service is defined, as I'm looking at the Shorter Oxford English Dictionary here, as provision of a facility to meet the needs or for the use of a person or a thing, or assistance or benefit provided to someone by a person or a thing, the work which an animal or a thing is made to do, the use to which it is put. Does that help us? And that'll be my last question to you.
What I am saying is there's a distinction between a service and when what you receive was not consideration. I think that's the way to look at it.
I think you had gone through, is it 2 of the 4 sections that you had indicated you wished to consider?
The third would have been to drill down into the definition of what management is and what technical would be. That would have been the third portion. Yeah. So in short, I would say...
Very short.
Yeah, very short. The 3 levels of court did not do an extensive analysis into what those were. They just said it falls within. Now, there's an interesting distinction between the 3 courts in that the High Court, the commissioners said it was management. The High Court said it was a mixture of management and technical. But they both said all the payments fall into those buckets without explaining anything about it, but that's what they said. But I'm just saying one said management or technical, but everything was that. And the Court of Appeal said, even though it said everything was held everything to, in a sense, be, in the category, so to speak, it used the word some. And I thought that's interesting. So in other words, the Court of Appeal's decision, and this would be at page 727 of the bundle, you will note that the Court of Appeal said it cannot be disputed without analyzing what each term meant, that some of the services provided by the head office fall within the category. Now, I find that a very curious statement because if we have a whole bunch of things, what does some mean? Does some mean a small amount? Which ones were not? This is why definitions matter.
Is there anything you wanted to say very quickly about the taxing jurisdiction, or will you rely on your written submissions for that?
Well, I'll just say very briefly that there are really 3 principal sections here that are important that we need to see the interrelationship of. There is Section 8, which is the taxing jurisdiction. It brings money into the net, and it basically says, if you're going to be subject to tax, depending on what category of taxpayer you are, whether you are ordinarily resident, but not ordinarily resident, or non-resident. And essentially, the first 2 categories are on their worldwide income, but the distinction being that somebody who is not ordinarily resident is only on receipts that they receive in Saint Lucia, but the non-resident is only on amounts accruing inside. So that's one section that is critical. Another section that's critical is Section 2, which defines assessable income, and it says it's a composite of 2 things. It says what is defined in Section 8, which is what I've just said, and then what is ascertained in Part 32. So in a sense, one provides the scope, one says where you can fish, and then the other one tells you what the fish is. Then we have Section 7.5, and Section 7.5's gateway provision is income ascertained in accordance with Part 5. And when you go to Part 5 only deals with assessable income, which means income that has been defined and is part of St. Lucia's jurisdictional net. So the dispute between the 2 parties comes down to essentially how 7.5 is drafted and what does it mean. The revenue kind of takes the position that, and the courts below, that, and remember, it's ascertained, not to be ascertained, or ascertainable. It is ascertained in accordance with Part 5. So it means by the time you get to 7.5's consideration, you have income that is sourced in the territory. And then Section 7.5 says, to withhold after the withholding tax provisions, which is Section 76. That's what Section 7.5 does. Or it says if it's a permanent establishment, taxable, you go through the regular point. So the short point is that in BNS's submission, when you read it clearly, but again with emphasis on the type of income that comes in, you will note that it has to be assessable income. Now, there was another question that you had raised in terms of Part 7, right? Because this kind of ties into what the Section 76 do, right? It's in Part 7 and what have you. Now, I believe it is in Section 7 sub 6. Section 7 sub 6 discusses, and this is under Section 7 sub 5, naturally. It discusses certain things that happen in Part 7. And it actually identifies two classes in Part 7 that are charging provisions, which means not everything in Part 7 is a charging provision, even though it may speak to certain aspects of a taxpayer. So you mentioned Section 77 and what have you. These are pay-ye deduction sections, so to speak. We know all that is, there's nothing about the income going that doesn't otherwise meet the criteria of emolument. It's just the form that it is collected. So the real critical thing is the character of income that already came through St. Lucia's jurisdictional net does it somehow bounce out of the net and go somewhere else and lose its character? Now, I understand when we read the sections that there could be a difficulty in terms of interpreting some of them. I mean, even Justice Ventos, in terms of looking at, he would note certain things that in Section 39, I would have noted a typo. So I recognize that there could be challenges in reading some of these sections. But when we look at it holistically, it's clear that source applies to withholding tax. And I'll just give one clue, apart from what I've said just now, because we do, and that would be Section 84, sub 5, I believe it is sub B, of the Income Tax Act.
Councillor, I think you really have to wind up. Is that the last?
Yes, that
clue
is
you were
the
giving
last.
us? Yes.
But that section, as I said, it specifically discusses source in the context of Section 76.
We'll have a look at it.
Thank you.
Thank you very much, Council. The bench will rise for a few minutes and we'll return thereafter. Thank you. Yes, Counsel, we're ready to hear you. Thank you.
Thank you, Your Honors, and good afternoon. Your Honors, our written submissions can be found at pages 2200 to 2212 of the record, now accompanying authorities at pages 2213 to 2404, and the respondents will be relying on the written submissions contained therein, and we will be advancing our oral arguments this afternoon. Your Honors, as you would have already heard, and which the respondents would agree, the appellant on, is that there are two central issues in this appeal between the litigants. And we therefore propose to adopt those two central issues, but address the principal issue in this appeal, which is whether withholding tax was properly applied to the amounts termed as head office expenses by a branch to its headquarters in Canada. Your Honors, on that question, the applicability of the headquarters expenses to withholding tax is our submission that Section 76(1)(b) clearly applies to the factual matrix of this matter. And as Your Honors would have heard and read in our written submissions, in our view, what the real issue is whether the headquarters expenses was properly categorized as a management charge in the circumstances of this case, or whether or not it were to be construed as something entirely different. We rely on paragraph 6, Your Honors, of our written submissions in that regard.
Counsel, before you launch, are you in a position to agree, or do you have a different view that the lower tribunal and courts did not undertake a forensic exercise on this issue that you have framed, whether the head office expenses were properly categorized as management charges? And if you do not agree that there was not a proper forensic exercise, in the course of your submissions, and for my benefit, would you identify where they undertake that forensic exercise, what tests they set out to determine which is which, and how they analyze that? Thank you.
Thank you, Your Honor. And to answer the question, Your Honor, the appellant and the respondent are somewhat in disagreement as to whether the question of management charges is a mixed question of fact and law or purely one of fact. It is our submission that it is purely one of fact. The definition of management charges already being defined under the Income Tax Act under Section 2. And to answer the question, Your Honor, it is our submission that the courts below and the appeals tribunal and the commissioners properly evaluated the nature of the payment that was being the subject of consideration. The taxpayer, in this case the Bank of Nova Scotia, labeled the payment as a mere reimbursement, and the tax commissioners at paragraphs 53 and 57 of their decision, Your Honors, which can be found at, and I'm going to refer to the PDF page number, Your Honors, 338.
The record, sorry?
338 of the PDF, which is 389 of the bundle. This is where it is our submission that the tax commissioners considered or evaluated the nature of the payment that was under consideration and what the appellants would have challenged. The Court of Appeal.
Hold on. Are you saying that paragraph 53 amounts to a forensic analysis?
Paragraph 53, Your Honor?
Is that what you're saying? 53
That
to
is where
57?
the tax commissioners considered the issue.
This 53, they state what the claim is, the allegation.
53? The appellant alleges that the said payments were
Yes?
and they said inter alia certain internal back office costs incurred in the respective countries without any markup whatsoever for the benefit of the BNS group, inclusive of loan credit review, analysis of credit risk, computer support, legal services, audit, ATM capital expenditure, funding and treasury support, and then went on at paragraph 57 to come to a conclusion. The tribunal's assessment in relation to the listed payments made by Bank of Nova Scotia, Saint Lucia, to its head office in Canada, and the tribunal goes on and identifies compliance and risk, information technology services, procedures and policies, and goes on. These services would attract necessary charges. In the case at bar, the appellant asserts that these charges were incurred for the provision of management, technical and or other services in the form of legal services, audit services, computer, etc. The tribunal concludes these services were provided for Bank of Nova Scotia, Saint Lucia, and they are fully captured by the schedule and attract withholding tax. So it is our submission there that the appeal court evaluated, because it was based on what the appellant, the Bank of Nova Scotia, had advanced to the Comptroller of Inland Revenue as to what the term that they called reimbursements were applied towards. And the tax commissioners evaluated the bank's own evidence and came to the conclusion that those services for which those payments were made were properly categorized as a management charge, as the Comptroller of Inland Revenue would have done, Your Honours.
Council, since there's been this debate on the concepts of management charges versus head office expenses,
Yes.
and we've seen that the legislature defined management charges, but did not define head office expenses. And your colleague in his time did show what the equivalent provision looked like before 2006. And the pre-2006 version did not have the phrase head office expenses in section 39.
Yes.
But it was introduced during that period. Of course, it would have been, we agree, it would have been helpful if the legislature defined it, but it didn't. What, in your opinion or research, do you think the legislature was getting at with that introduction of the phrase head office expenses that they made an amendment to?
Yes.
The provision just to put in there. What did they have in mind, to the best of your ability to assist?
Had in mind were any head office expenses which were not either royalties or management charges, and which were payments made to your head office for expenses that the head office had incurred for the benefit of the bank. And I believe Your Honor would have mentioned earlier that perhaps maybe the construction of a building, and particularly I would say in the international computers case, administrative charges, for instance, by the headquarters who have charged the branch for carrying out whatever administrative processes for the branch. Because, for instance, they might want to take advantage of economies of scale. I believe it was the appellant's submission, not today, but throughout the course of the litigation, that because of the group of companies, the bank was taking advantage of those very economies of scale, and certain administrative charges would have come up and would have been absorbed by the group. So in relation to the management charge, what I would submit, construing section 39, is that a head office expense is not a management charge. And what the tax appeal commissioners would have done, and before we even get there, what the comptroller would have done was to assess that payment that was moving from the branch to the headquarters and determine, is this a head office expense? Is it a management charge? Is it a form of a royalty? And the bank would have given evidence as to what was the purpose of these payments. And the tax commissioners did consider that, and they came to the decision that it was, in fact, for a management charge.
So
And I would like to make...
in that run of submission, it seems that you've made a difference between the administrative charges and management charges. What is the difference between an administrative charge and a management charge, as far as you can tell? Beyond the structural expenses or capital expenses, if you were, that the head office might have incurred.
Your Honor, thank you. I want to answer the question, go to what the Court of Appeal said on this matter. And that can be found at PDF page 652. Which is page 703 of the record. And that is paragraph 2 of the Court of Appeal's decision, where it gives the background. And if we continue on to page 6, following page, where the Court of Appeal essentially adopted what the learned trial judge would have written in her judgment as what were the nature of the services performed by the head office for the branch. And at paragraph 15 of the trial judge's decision, which is being cited by the Court of Appeal, it says that the head office expenses include costs incurred by the head office on behalf of the entire group of companies in respect of loan credit review, analysis of credit risk, computer support, legal services, audit assistance with ATM capital expenditure funding, compliance, and treasury support. And at paragraph 16, and again, they're still quoting, and I highlighted the policy and procedure guidance, which is about 3 lines up from paragraph 16. And when one examines this, one can see that the nature of the services is managerial in the sense that it has oversight, control, direction, instruction, or conclusions, I would say, Your Honor. And it is not merely administrative. So legal, you're looking at credit review, and it's almost like you exercise a supervisory role over your branch. And in the terms of, in the context of management, it is oversight, control, direction. So if any of the activities that reimbursement applies to fits within that description, and it's not a mere head office expense, and it's not a royalty, and it has all those trappings of management, then I would submit, Your Honor, that that is what the court evaluated and concluded. And I would like to submit that the purpose of the tax appeal commissioners, which comprises all accountants with a vast amount of experience, they would understand what a management charge is. And
would you say, then, according to that analysis, that Jamaica, Trinidad and Tobago, Barbados, were in a managerial relationship with Saint Lucia?
What I understand of the structure of their system is that, firstly, the payment is made to the head office in Canada. And essentially, it's the head office, Canada, which is carrying out those functions which it may distribute to its various other supervisory branches based in perhaps Jamaica or Canada, sorry, or Trinidad and Barbados.
But, as I understand it, again, correct me if I'm wrong, from my reading of the record, it seems to me that Jamaica is also doing some services that's benefiting Saint Lucia.
Yes.
Trinidad and Tobago is doing the same thing, and so is Barbados. So it's not necessarily in that arrangement. It's not all Toronto doing it. It's all these other, should we say, coordinate level
Yes.
banks or branches that are also assisting St. Lucia. Are they those other coordinate level banks and branches in a managerial relationship with St. Lucia?
Your Honor, I don't want to misspeak and say what it may or may not be, but what I understand is the payment moved from St. Lucia to Canada, and Canada was claiming the benefit of those expenses. However, it distributed it among its associates, affiliates, etc. So Canada was saying these were my expenses, and therefore I will take the benefit of the reimbursement that the appellant is saying that it was. So we look at it strictly from that point of view, where the source of the payment was and where it moved to. And it moved to Canada, and they were claiming it.
Counsel, help me here. The word charge, is there any significance whatsoever to that? Management charges. Management charges, has a definition, but there is no definition of the word charge. Now, I ask that in the context of something could be not a charge, but as the other side said, a reimbursement, or something could be a charge in the nature of a compensation. So is there any significance to the word charge, or is it a neutral word used in different senses?
Your Honor, unfortunately, I don't have a precise answer for you, but I would submit that we briefly considered it and said, what is the precise meaning? Why would they have said charge here in terms of management? Charges. Does it have a legal significance? The fact that it was not properly defined, then we go back to say, well, we give it its ordinary meaning. And I would say...
But what's the ordinary meaning in your view?
I would say a charge is something that someone asks from somebody or demands. If it's a charge, perhaps you don't have a decision to make as to whether you pay it or not. It's a charge. Yeah. So then once the head office would have charged that, the branch was, I would say, almost compelled to pay it. And I would say that's how I would construe charge to mean a management charge, because management charging to perform that particular service.
But if the head office requires reimbursement, let's say it's a clear case where they spent some money on behalf of the St. Lucia branch and say we are now requiring reimbursement, on your use of the word, that would be a charge?
Yes.
I see.
And Your Honor, I would say further.
So charge has a particular meaning then? Charge to your mind is a payment?
That's where I was going, Your Honor, that management charge falls on the schedule, under the schedule. Section 76.
But the curious thing, if I may stick with the word charge, management charges means charges. It does not say means payments made in connection with or anything. So again, I am caught. I am not requiring you to have the answer. I'm just seeking your assistance so I can understand when I see the word charge, what are the various in context meanings that I should consider. So,
and I would submit further on that, Your Honor, that because charge falls under the schedule, which is then defined in the section 2, but the substantive provision, which is section 76, speaks of a payment. The payment expression is very broad and expansive to incorporate all forms of payments, whether they be reimbursements, whether they be charges, whether they be a fee or fine.
The difficulty, Council, with that is that it doesn't 76 say in accordance with Schedule 3. The
Correct.
payment
And yes, so it
to be
limits, I would
subject to
say,
withholding tax must be within the
any payment, sorry, Your Honor.
confine, yes.
So,
And then the application, in our case, is the management charges.
yes.
Right, so we can't avoid the reference to the word charge because that's the basis on which we are going to be saying that payment is to be subject to the withholding tax.
In other words, isn't payment to be interpreted to mean a charge made for the provision of management services? You'd accept that. And so therefore, the question that our brother raised remains. What is the meaning of charge? Your answer to that was it means it's synonymous with payment because the section 76 refers to payment. What the president has brought to your attention is that is a sort of a circular thing, but it doesn't get us to where we want to get to. Because the payment must be a Schedule 3 payment, which is a charge for the provision of services, which is what our brother was asking you. What does charge mean?
And thank you, Your Honor. And what we would submit that because the Income Tax Act itself does not define charge, then by necessity we are left to give it its ordinary meaning. And I would submit from just looking at the ordinary dictionary meaning, a charge is said to be a demand of an amount as a price for someone for a service, from someone for a service rendered for goods or services supplied. And it's consistent with what the respondent would have submitted earlier, that a charge suggests that you are almost compelled to pay. It's not a negotiation in relation to that payment, where it's I offer and I counter, and I say, well, can I pay this instead? It's a charge. And that's what I would submit to the court, that they may consider in construing the term charge in management charge. Grateful, Your Honor. Now, Your Honor, we want to deal specifically with Section 76. And we often, and we have on every occasion, started with this provision to simply state that the law is clear, and it says where a branch makes a payment to a non-resident head office for any payment which falls within Schedule 3, withholding tax would apply. And we invite the court, as we've previously done in all the matters that we've argued in this case, what are the facts of the case? There was a branch, there was a headquarters, a payment was made, moved from the branch to the headquarters, which is a non-resident based in Canada. The facts fit so symmetrically with the law that it is our submission that it would be most perverse for a court to find that Section 76 did not apply to the facts of this case. And why we submitted in our written submissions, paragraph 6, the real issue is whether the tax comptroller, tax commissioners, and the lower court were all correct in deciding that the payment was a management charge. And it is our submission that they did correctly come to that determination. My learned friends have maintained throughout that it is wrong of us to start at Section 76 because the starting provision is more accurately 7.5, which they call the charging provision or the gating provision. So before we even get to 76, we must go through 7.5. In answer to that, Your Honors, it is our submission that 7.5 is simply the general provision, and 7.5 is what creates the concept of withholding tax. And we move to the specific charging provision, which is section 76. And we would repeat again today what we've repeated before, that if a comptroller wanted to charge a withholding tax, could she have done it under section 5 on this factual circumstances? It is our submission that there would have been an immediate objection and saying, well, under what authority, what legal authority do you have to charge a payment that I made to my head office? And if the comptroller said section 7.5, they said, nowhere does it do that under section 7.5. And which is why we have maintained that section 76(1)(b) is the proper specific charging provision for the circumstances here, and Schedule 3, to use the appellant's terminology, is the machinery by which the comptroller would have arrived at the amount of the liability. My learned friend would have...
Sorry. But isn't there, shall be deducted in accordance with and in the manner specified? So it is not simply that the Schedule 3, as it were, provides a calculation basis, but it provides as well a basis, a cause for charging.
Yes.
No?
So section 76(1)(b) charges the specific liability, and it directs that how do you calculate that liability quantitatively. You look at Schedule 3. And that is what the exercise the comptroller would have done.
But is
it is
Schedule
not
3 just how you calculate or whether it applies? Is it both? Because it says, because it says with
Payments,
in
payments by way
accordance.
of.
Yeah.
Yes, so it is our submission. There's section 76 that creates a situation where payment is moving from a branch to the headquarters. And then we determine under the schedule, in accordance with that schedule, how, in what circumstances does that payment that is moving, because it's already
With the greatest
created.
respect, it's not in what circumstances, it is which payments, not just, all right. If you take which payments and under what circumstances as synonymous, I'm good with that.
Thank you, Your Honor. But on that point, I would like to refer to paragraph 7 of the Court of Appeals decision, where it was referencing the Whitney authority. That's paragraph 7, Your Honors, and Your Honors have that?
Yes.
Yes.
Thank you. And I'm reading from the Whitney authority that's been cited there, somewhat in the middle of that excerpt, where it begins with now. Now, there are 3 stages in the imposition of tax. There's the declaration of liability. That is the part of the statute which determines what persons, in respect of what property, are liable. And next, there is the assessment. Liability does not depend on assessment. So I want to pause here and first start with the declaration of liability. That is the part of the statute which determines what persons in respect of what property are liable. It's our submission that section 71B says what person and in respect of what property. So it says a payment, and it says a payment moving from a branch to headquarters. And then we go on to the assessment, which is the assessment, which is liability does not depend on assessment. The assessment particularizes the exact sum which a person liable has to pay. So who is liable? Was the headquarters if it fell into one of the categories. And it gives you the quantification of how you assess it.
I think we have your submissions on that point.
Thank you.
Before, earlier, you were speaking about the applicability of 7.5.
Yes.
And I think you were refuting the suggestion by the other side that 7.5 was applicable. Now, when you actually look at 7.5, however, it does refer to income.
Yes.
And it is just that, as I think your opposite number mentioned earlier, if it's a kind of income that accrues to the non-resident head office, then it goes in the direction of withholding tax. But the fundamental point is that it has to be income. I'm not sure that we heard you fully on that point. Did you want to elaborate?
Certainly, Your Honor. And just to make clear, we are accepting that Section 75 is applicable in the sense that it's the general charging provision that creates the concept of a withholding tax, but it moves to the specific provision under Section 76, 1B, and as my learned friend would have submitted earlier, that the general gives way to the specific. And it is our submission that consistency of that principle has to be followed in respect of construing Section 75 and with its connection with Section 76, 1B. And this was the similar exercise that was conducted in the William Scott decision, where they moved from the general provision, the charging provision, and it went to the specific charging provision. And in terms of it being income, Your Honor, this is part of this court spent considerable time both at the tax appeal commissioner's level, the High Court, and the Court of Appeal.
So just to mention, following you, you're agreeing then that to come within 76, the concept of payments must include income to satisfy 7.5.
The appeal concluded that we have not cross-appealed on that issue because we had maintained previously that, in our view of the Income Tax Act, it created two potential schemes here, and which is why we had supplied the Bank of Nova Scotia case, which was suggesting that withholding tax may not necessarily be the same as an income tax, and its nature may be somewhat different. We have not cross-appealed, Your Honor, and assuming that we accept what the Court of Appeal said in relation to income, Your Honor, what our submission is that...
No, pause. I just want to be very clear on this. My understanding of what the President has asked you, and I may be wrong in this, is that do you accept that Section 76 has to be read together with 7.5? And insofar as 7.5 speaks to income as what is taxable, 76 must be read in that context. Is it that you are saying the Court of Appeal said that, or are you accepting that?
We are accepting that, Your Honor. That
So,
we read...
sorry, you go ahead.
Yes, so that you, in order to construe Section 76, Section 7.5 must be taken into account, which is the general charging provision for withholding tax. And then you move to...
No, I know, but you see the President was focused on income.
Yes, and I wanted to get to that particular
All right,
submission.
I'll hear you, and then if I need to ask something more, I will.
Thank you, Your Honor. And there was considerable time by the litigants arguing and debating that very question as to what was the meaning of income for the purposes of Section 76(1)(b). It was our submission. Sorry, could you just pull up the exit nexus? That the appellant has not, in their written submissions, defined precisely what they mean by income or of an income nature. What we gather from the submissions and what they appear to be suggesting is that in order for Section 76, when you're considering the income, any of the listed items in the schedule must be either income or income nature. And what do we mean? What does the appellant mean income for the purposes of the Tax Act? What do they mean of the nature of income for the purpose?
Is it for them to define that, Counsel, or is it for you to demonstrate that payments must be included as an element of payments, the notion of income?
I would say,
You're the one who is,
yes, I would
charging the
submit to Your
tax.
Honor that to assist the court, they could have indicated what the appellant understands that to mean. And they would have assisted the court in treating with the two competing issues. And I'm submitting what the appellants, from what I understand the appellants to be saying, that it can only be income or only be of an income nature if it has a profit or gain element. If it is divorced of that, it is not income, and therefore it cannot be taxed, so it's not taxable. So they're saying every payment, the payment that is being discussed under Section 7, that is mentioned in Section 76(1)(b), it has to be of an income or income nature, must have a profit and gain element. And that's why they've consistently been saying that it was a mere reimbursement, and there was no markup, to use the expression. There was no markup for this.
Mr. Sinaka, I'm hesitating to cross question, but can we look at 7.5? Can we just look at 7.5 together? Because you have accepted that 76 must fall within the context of 7.5 and income. I think that much we have agreed on. It says where income ascertained in accordance with Part 5. So the subsection 5 is speaking to what income they consider relevant. Income ascertained in accordance with Part 5. Yes. Accrues, all of that is fine. Such income shall not form part of the assessable income of such person. But the gross amount of such income is liable to withholding tax in accordance with 76. So is it then that for the purposes of income, the purposes of withholding tax, the payment referred to in 76(1) and characterized in the third schedule, i.e. management charges in this case, must also fall within this definition? Income ascertained in accordance with Part 5 of the ITA, Saint Lucia. Yes. Your answer is yes. Okay.
And that's why we were submitting on what the parties understand income to mean. And the appellant has consistently maintained that income can only be in relation to the gain or profit element. And we are saying no.
What does Part 5 refer to?
Part 5, that's Section 32?
No. Well, Part 5 in terms of the assessable income. Is that referring to gain, profit?
Yes, and we would submit on that, Your Honor. Just let me get to it, sorry. And what we've flagged for the attention of the tax commissioners and all the courts below, that 32(1) says, subject to this part, the assessable income of any person includes the gains or profits from or by way of any of those listed items here. Mm-hmm. And we're saying...
So you're putting some premium on the word includes,
absolutely,
first of all?
Absolutely, Your Honor. And we are saying includes suggests that there are other qualities of income or of an income nature that does not limit it, Your Honor, to simply any payment you receive from a gain or profit element. We're saying it's much more than that. And once you go with the expression of an income nature, what now then are we speaking of? And if you can go back to the and we spent some time.
Help me with the first principle. In the area of taxation, tax law, is it a first principle that the approach of the courts should be to view the sections with a measure of narrowness and restriction because they are not punitive, maybe that's not the right word, but they are extracting taxes? I must confess I studied these principles under Dr. Denbo many years ago.
Sorry, under?
Dr. Denbo.
Oh, yeah.
Many years ago, but too long to be as en courant as you probably are. So just on a first principle approach, what is the court's approach to provisions that provide for taxation? What is the sort of statutory approach? What is the interpretive approach and the application that courts must take? Is it expansive? Is it more literal? Is it more narrow, more circumscribed to the
Yes, Your Honor,
text?
I would candidly accept that general principle of tax law, that because it is, I don't want to use the word penal, but because it is imposing a burden, I'll use that, a burden on the taxpayer, it should be expressed and it should be clear. And the court will only construe it, I shouldn't say only, but the court will generally construe it narrowly.
Right. So let me ask a follow-up question. Would you agree that given the examples in Part 5 of income, that they fall into the bucket of profit and loss? We hear what you say about includes, I hear that. Mm-hmm. But for that, and of course the word includes means what it says, would you say the examples given, because they have a list, right? Would you say that those are they, how would you characterize the categories of income? Profit and loss is one. What other characteristics do the examples demonstrate?
That they are payments also.
They do?
Yes, that they are payments.
That are not necessarily profit and loss payments?
They are not always profit and gain oriented. And that is what the learned...
No, is that in the examples in Part 5?
Yes.
Okay.
Let me have a look.
Can we? Or if you prefer, I'll turn it up myself. I don't want to impose on your time.
Your Honor. Because what I would submit, Your Honor, is that both the courts did look at the provision in the Part 5 and saw a similarity with what was stated in the schedule, and which is why in the courts below and before the tax commissioners, we identified, even from Section 1, it speaks of, and it appears to differentiate between the income and with payments, and Section 76 speaks to payments. And
Counsel, on this point,
Yes.
I don't want to digress, but I did notice when I looked at Section 32, you did point to Section 32(1), which speaks to assessable income, including the gains or profits arising from certain matters. But if we go to subsection 2, it does make clear that subsection 1 shall not be construed so as to bring within the meaning of assessable income, liable to assessment, and what is also listed is paragraph B, any amounts accrued to a non-resident other than from the carrying on of a business or the exercise of employment which are liable to withholding tax. So what I took from that was that amounts, income which accrues to a non-resident other than from the carrying on of a business or the exercise of employment is liable to withholding tax, it is not to be considered to be assessable income arising from gains or profits. And so if I could, to follow on from where we are, take you to paragraph 15 of your written submissions.
Mr. Medley.
This is the respondent's written submissions appearing on page 2205. Because I wanted to just interrogate the related point. You would have submitted that a management charge does fall within the definition of income or of an income nature. So in other words, you're arguing that even though there is no gain or profit element, which is necessary for the definition of assessable income under section 32(1), a management charge which is subject to or could be subject to the payment of withholding tax could still be considered income. It could still be considered of an income nature, even though it does not have that gain or profit element. So in other words, to go back to the President's original question, income can be subject to withholding tax, even if it doesn't have a gain or profit nature. Because if it has a gain or profit nature, it then becomes assessable income, which is what section 32(1) is addressing.
You lady, you have summarized our point here very succinctly, and yes, that is our submission. We were open to develop it in the context of the Bank of Nova Scotia case, which specifically stated that every tax statute has to be construed in the terms of its own language. And when one looks at the Income Tax Act of Saint Lucia, what we do notice, and my learned friend was at pains to identify the number of changes that the Income Tax Act would have made, and starting from section 1, where it speaks initially of the income tax, and we can perhaps conceive that here it's meaning the profit and gain element, and then it introduces in sub B payment. So it's moved away from the pure terminology of income to payments. And then we look at what was the amendment under section 76, which originally was just section 7. Well, I suppose it wasn't a sub 1 because it only related to section 76(1)(a). Then which captures entirely the appellant's arguments. Because if we didn't have B, we would not be here, Your Honors, because you would have to have had two persons interacting here. But B made a specific amendment to capture those payments from branch to headquarters, and it did not use the precise terminology of the income, where income is paid to the headquarters. It says where a payment is made. And then we go, and what Your Honor would have mentioned, based on our arguments here, that how one assesses the schedule to determine, even if it does not have that profit or gain element, it can still be construed as income. And that would take us to the, let's bring it up again, sorry. Sorry, Your Honor, we just want to...
Is it possible to see that the distinction that Justice Ononewo highlighted in even looking at section 7.5?
Yes.
To say that section 7.5, subsection 5 makes a distinction between assessable income
Yes.
versus withholding tax.
Yes.
As uses the expression assessable income, and section 32
Yes.
defines assessable income to include profit or gain element.
Yes.
So that is assessable income, and then you come to section 7.5, we see reference to employment or business earnings go to assessable income. Everything else that's not that goes to withholding tax. Is that a way to look at it?
Yes, Your Honor.
Oh.
Yes. And I just wanted to reference our authority that we extracted from Halsbury's Laws of England in respect of what they had to say as what income was. And it says here that the relation of a receipt or profit, not itself specifically charged, to a designated source from which it is derived must, in order to render it taxable, So in order to be rendered taxable, oops, what happened? Sorry, Your Honor. In order to render it taxable, be of a revenue or income nature as distinct from an accretion of capital. And it goes on, but that first line we are submitting is sufficient for our purposes in determining how the court can treat with defining or understanding income and the nature of income. So it has to do, yes, we accept, with a, sorry, let me go back to it, a profit or a receipt. And that is what we are saying the Income Tax Act is capturing, particularly with the amendments, when it's moving from the word income to the word payment. And when it's referencing income, you can say, yes, perhaps that's what they're referring to, the gain and profit. But when it's using the word payment for the purpose of income or of an income nature, it means a receipt. So in other words, once the head office is in receipt of a payment, which can fall into one of the categories, it is of an income or an income nature for the purposes of taxation. And the comptroller can properly apply a withholding tax to it. It doesn't have to have a profit or gain element. And when one looks specifically at the provision of Section 76(1)(b), how could that not be the case?
Counsel, just to follow up on that point, because I think we are clear that a lot is going to turn on whether the payments that were made in this particular case from the branch to the head office fell within the scope of, more specifically, management charges, right?
Yes.
And so I come back to, because I think it's quite critical, the distinction between head office expenses and management charges. My brother asked, what is the significance to be attached to the word charge? Because what is clear, having heard as well the submissions of the appellant, is that the branch clearly benefited from the services, if you wish, that were being provided, right? And so if we go back to, I think it was paragraphs 14 through 18 of the High Court judgment, there's a clear description of the various expenses. Some of them are expenses which are being incurred by the head office on behalf of the group. Some of them are related to services being provided by subsidiaries of BNS for the benefit of the Saint Lucian branch. Is there any submission the respondent can make that would help the court to understand the legal distinction between head office expenses and management charges? If you are dealing with a scenario where a branch is benefiting from, let me use that loose term, a branch is benefiting from services being provided by its head office or by associated subsidiaries, which is what we're dealing with here. And therefore, on the face of it, you have what Section 76(1)(b) is relating to. That's pretty much the language that's in Section 76(1)(b). What would distinguish between, what test would allow the court to understand the difference between whether this is simply a head office expense, which is being allocated between the parts of the group on the one hand, or a charge that had been levied for the provision of the service the branch is benefiting from? Don't know if I'm being clear, because
No, absolutely.
that is what we're dealing with. St. Lucian branch is benefited from the services provided by the head office and by associated subsidiaries. What is the line what allows the court to know the difference between whether it's a charge that's being provided, what is the distinction between the charge for the provision of the service the branch is benefiting from, or some expense that was incurred that's now being allocated between the parts of the group? Thank you.
Thank you, Your Honor. And I would submit that the starting point for distinguishing between the two items would be first Section 2, that actually defines what the management services are. Let me just go there. Let me make sure I get this correct.
And for purposes of your answer, if the item is management services, then by definition, it cannot be a head office expense.
That is what we would be submitting, Your Honor. And let's see. Right, management charges, right. Means charges, oops, let's go through. Made for the provision of management services, personal services, and technical. Your Honor, I would submit that looking at that definition as to what a management charges and where it lists the three items, it would exclude by definition everything else, which is not management services, which is not a personal service or technical service. And then we look at what was the factual findings of the courts below. The factual findings were that the items listed by the appellant as to the nature of the activities that were undergone was considered to be managerial and technical in nature. And once the fact finders below found that those activities which you have conducted are management, are technical, it is our submission that automatically the schedule would trigger the schedule, the provision stated in the schedule, rendering the liability to tax or withholding tax applicable.
Counsel, quick question. So you've made the focus of the distinction, the nature of the service provided, right? And you said that if the nature of the service provided is of a management nature, or it is just, I'm focusing on management or technical for the purposes of our case, or technical in nature, then it's a management charge.
Yes.
What's the significance of the words charges made for? Because there are two components to this definition. In other words, is it simply about characterizing the nature of what the branch is benefiting from, which speaks to the character of the service? Or is there any significance to the words charge made? So do you just stop at characterizing the service that the branch is benefiting from, or do you inquire into anything else?
Counsel, before you answer that, let me add to it, and it perhaps may elucidate the answer you choose to give. Any of these things listed can be provided without charge. So think about a situation, a technical service. Head office provides a technical service and writes to the branch and says, okay, listen, we have incurred expenses of $2.5 million in engaging Pricewaterhouse, et cetera, for the provision of these services, which are comprised in what we did over the last 4 months. Your share of the cost of this is $500,000. We look forward to your early remittance of this amount so that we can be reimbursed. that could not be a charge, could it?
I would submit yes.
Just because of the nature of the provision.
Because it is a payment moving for that service.
So once it's a payment for that service, it does not matter if it is simply a literal reimbursement, a calculated, demonstrated reimbursement. Once it is payment for that service, anything in the nature of a management service, it gets caught.
Yes.
Good,
Your Honor,
you're clear.
Yes, and we are submitting these provisions were specifically introduced to capture those payments moving, whatever.
So wait, hold on, Mr. Sinha,
Yes.
because our sister asked a question and our brother, Mrs. Baru, added on a piece, and her question was, and I think I would certainly like an answer, is to satisfy the Section 2 definition of management charges, must you satisfy, one, the character of the service provided, and two, whether it is, whatever we define this to be, whether it is a charge. And then our brother Barrow went on to give an example, but you seem to be going back in your response to say characterization alone is enough. So I'm just circling back to it because what our sister asked you was whether you had to have both characterization and, as an objective forensic determination, something in the nature of a charge.
Your Honor, I would answer that by submitting that the answer would depend on if the court is attaching a special meaning to the word charge.
So that's what we're asking you.
Yes. So outside, and my submission is that there is no special meaning to the word charge.
Okay.
That it's not defined, so it is not as the Parliament did not intend for charge to be given any particular special legal meaning, and therefore its ordinary dictionary meaning is to be applied to the term. And it is our submission that where headquarters tells you that I'm charging you X and you pay X, that is a charge.
No, you go further. They don't even have to say, I'm charging you. They're saying, make a payment of, and you're saying once it is a payment for the provision of a service of a particular nature, then it is, for purposes of this, a charge. Even if they say it is purely for you to make us whole. Yeah? That's what you're saying.
Yes, absolutely.
But hold on. Let us create a hypothetical. You and I agree to do something together, and it is for our mutual benefit. And I do the output and create the operating structure, and we mutually benefit. And our agreement is that we would share the costs on whatever basis, some prorated basis, it doesn't matter. And then you pay that money. There's a payment, which is the agreed cost for our shared benefit. Is that a charge? Is it that I have charged you for something? Or is that simply an internal remittance of a portion of a commonly incurred fee for a common purpose? And I think that's what we're asking you about when we ask about whether charge is to have any significance.
And our
And
submission is,
you would call that a charge?
yes,
Yeah, all right, good.
And
Fair
it's
enough, I'm
it's
clear, thank you.
and it's a payment. Your
No,
Honor.
we're not asking you if it's a payment, we're asking you if it's a charge. You say it is a charge.
Yes.
Yes.
And, Your Honor, I would go further, Your Honor, to submit that the purpose of the provision is to capture the movement of any charge from any payments made from a branch to a headquarters. And once it has to be paid, the Tax Act is saying that a withholding tax is to be applied to it. And we must recall that Section 39 is already allowing the branch to have a taxable benefit by deducting that very payment that it's making to its headquarters under Section 39, that if you make pay a management charge, if you pay a headquarters expense, you, the branch, get the benefit of a deduction from your income, your assessable income, and it reduces your tax liability by that very amount. Then the Tax Act is moving to say, how now do we treat that payment that the branch has benefited from in a tax consequence to that payment that's now moving to the headquarters? And it is saying, once you've made that payment and we've assessed it under the schedule to be a management charge, withholding tax is to be applied to that payment.
You have hinted at it before, but can you explain in a bit more detail why, in your view, 76 was necessary and was in fact enacted by the Parliament of Saint Lucia?
To capture the very scenario that we are speaking of today. It was to prevent the migration of capital from which the branch is already benefiting from and moving to the headquarters. Because remember, originally Section 76 did not have 1B. It was just in respect of making a payment to a non-resident. But clearly the mischief, Your Honor, was there was the practice of banks terming or labeling these payments as reimbursements for services that were rendered, and they were charging, and it was a mechanism by which money was extracted and paid to the headquarters, and nothing was paid on it because the branch already benefited from the deduction under Section 39, which was allowed. So Section 76 1B was introduced to specifically address internal movements, because that is the mischief. You are making an internal movement, and how do we assess that? And the Parliament said, for purposes of revenue collection, any internal payments that you're making, if the substance of it, as I'm citing the William Scott decision, looking at the substance of that transaction, is it for a management service? And have you been charged that? And it would escape the respondents how any claim to money where you are compelled to pay it would be construed as anything other than a charge.
On the same point, bring in mind all you have heard this morning, and you've been with this case for some time. What additional wording do you think, based again on your experience and exposure to the case, would be useful in achieving that objective that you just mentioned? You think that this is perfectly fine as it is, 76? Or if you were advising the draftsperson, would you suggest that we do something a little different to make sure that there is no doubt as to the, not just the intention, but the applicability of what is legislated?
Your Honor, I would submit that the Court of Appeal did explore the issue of whether the reference to person in the schedule is what the appellant was submitting.
I don't think the other side made too much of that this morning, so...
So that is one, in order to avoid that argument ever being raised, but the court decides, then it won't be raised anymore. But certainly we would submit that the new argument, and I should have submitted that earlier, that it's a new argument of the appellant introducing under Section 39 the bifurcation of management charge royalties and the headquarters of expenses. It was never put before the tax appeal commissioners, never put before any of the lower courts to consider. And if they were raising this point, and they never asked the comptroller either, well, what does the head office expenses mean? And if it was raised, perhaps the comptroller would have said, well, this is what it is. And because we perhaps would have advised Parliament what we mean by head office expenses. But it wasn't raised. But now we have to address it, Your Honor. So perhaps one potential recommendation is that perhaps the head office expenses as referenced in Section 39, which is to benefit not the head office, but the branch when it's making those payments, perhaps we should define that. So you don't get the argument again as to whether head office expenses is similar in nature to management charges. Because it is our submission, the very fact that they've introduced it means it's something different. And management charge is already defined. So perhaps going forward, I would submit that head office expenses might well benefit from a definition. And with all candor, I would submit that Section 76, in my view, is wholly clear. I think inescapable, because payment is made by a branch to head office. And yes, we've navigated, well, what do we mean by charge? And well, perhaps that too we can clarify as to whether it includes a mandatory payment, does it exclude reimbursements? And it is our submission that the provision as stipulated under Section 71B is sufficiently clear and is of no burden to the taxpayer. And they would have known clearly what the law was suggesting, that when you make those internal payments, the revenue has an interest in it, and it will deduct the amount per the schedule, Your Honor.
Mr. Sinak, the mischief that you articulated, is that anywhere in the record? Your articulation of what this act, this amendment to 76 was trying to achieve, you articulated it.
No, Your Honor.
Is that anywhere in the record?
Save for our submissions, no.
No, right. So there was none of the lower courts said this was the mischief and this is why it was introduced. None of that. You've just, that's your statement of what it is. I'm just asking as a matter of
Yes,
record
I
or
understand, Your
evidence.
Honor,
Yeah.
that it is our understanding, the respondent's understanding, the Comptroller of Inland Revenue's understanding.
Is that in the record anywhere? That's what I'm asking. I'm trying to ascertain where we can go in the record and see that some tribunal has said that the intention of this amendment was to achieve what you just articulated. Simpliciter, the mischief was banks. Remember you said the mischief was banks were doing this, the branches were benefiting from 39, and therefore the mischief was to close that off and capture exactly this situation. If that was the intention, then I am sure, well, you've articulated it very clearly, and it may be that it's somewhere else. I'm just trying to find out whether it's somewhere else in this, not in your submissions, you know. Not in
I
your
understand, Your
submissions.
Honor, and I was, as you said, from any tribunal, I was looking to
Maybe
see.
we could leave your co-counsel to locate the
Yes.
actual place in the record if it is there, and place that before us a little later. But time is pressing.
Yes.
So did you want to address any other major points to us?
Well, I would start quickly, I think, Your Honors, with the cost of sales issue, where my learned friend was submitted that the nature of banking hasn't changed. And the remarking on what the Court of Appeal would have said, that the decision in respect of cost of sales that the bank doesn't sell anything, that was the appellant's submission, that the bank doesn't sell anything, and so it doesn't have a cost of sales, and the traditional meaning is simply the sale of goods. And the nature of banking hasn't changed. And we wholly disagree with that, and we want to refer the court to, again, paragraph 2 of the Court of Appeal decision, where at paragraph 2, where they're citing what the learned judge would have said, particularly paragraph 17 of that excerpt, the second line, where it says, personnel also make sales calls in order to drive business. That was the evidence of the appellant in respect of the nature of the services. And there it is saying that the personnel of the Jamaica subsidiary also make sales calls in order to drive business. And that by the bank's own admission. Your Honor, I would submit that it is selling something.
I thought the argument was slightly different. I thought the argument was, at the time of the amendment, the nature of the business, of how banks conducted business, maybe made calls and so on, that was known. And so the definition of cost of sales was technical. And if it is, that Parliament would have known, that has not changed. And so if we are to approach it as a technical term, and there is no evidence to suggest that something has changed since the time of the amendment, then a court should not interfere. That's what I thought the argument was. Not that there is evidence of cost of sales, but that the nature of the business at the time of the amendment has not changed.
Your Honor, our answer to that is that the tax appeal commissioners, who we submit a specialist tribunal, paragraph 57, indicated what they, as trained accountants, about 4 of them, trained accountants, and 1 attorney chairing, at paragraph 57, explained what they understood cost of sales in the context of the Income Tax Act to mean. And it's our submission. It is not cost of sales for the business. It is cost of sales within the meaning of Income Tax Act. So for income tax purposes, what the cost of sales mean. And these accountants are saying what they understand this to mean is that it includes those interest expenses.
On that note, counsel, that section 38, subsection I, you had your colleague take us through it this morning, says any expenditure incurred during the year of income by way of interest on any loan made to that person shall form part of deductible items. Why should we not treat interest on customers' deposits, interest banks pay to deposit accounts? Why doesn't that qualify as loan made to the bank by the customer?
And Your Honor, it was, again, one of the new points that was introduced by the appellants had never been raised for consideration in terms of the applicability of section 38(1)(I), and it causes a moment pause to say, well, why is it introducing and what does it reference? And to say, thankfully, I think Your Honor would have indicated what her understanding of that provision was, and which is the understanding we hold, that in relation to section 38(I), this is in respect of loans secured by a taxpayer. And when they pay interest on it, they get the benefit of deducting that deduction of that interest expense from their overall tax liability. So in other words, when you pay that interest, it reduces your tax liability and the balance is what you would pay your tax on.
Doesn't loan connote a debt?
Sorry?
A loan entails a debt, doesn't it? Debt to somebody else.
That is correct.
When a bank takes somebody's money on deposit, doesn't bank owe that person the debt of that deposit?
The bank is a deposit-taking and loan-making entity. When a citizen places its money into a bank, it's made a deposit. It is not so much, I would not accept that it is a debt in the sense of section 38(I). It is a debt for accounting purposes. So it's been credited, the bank, it's been credited, and then there's a debit. So when they...
Why does the bank pay interest on savings accounts people have with them?
On my understanding of banking, Your Honor, it is that the bank is taking the benefit of that deposit, which it can utilize in its own business to loan out to third parties. And for the benefit of that use, and to also contribute towards the time value of money, you put some interest on it to incentivize a person to actually put their money in the bank rather than to simply hold it. So what our submission is that the interest expense raised under Section 38I specifically refers to a particular scenario when you have taken a loan for the purpose of raising revenue and you're paying interest on it. But what occurs ordinarily for a bank because of its banking activities or its business activities is simply the cost of doing business. So the cost of doing your banking business is that I have to pay an interest. I have the expense of paying you interest on that account, but I'm also able to earn a higher interest by offering loans in the Section 38I sense.
But when a bank takes a deposit from citizen A and says, for this amount I've taken, or you've deposited with me, we're going to pay you 2% interest on that.
Yes.
And the bank turns around and takes that deposit and loans it to citizen C and charges citizen C 5%
Yes.
on that loan. Isn't the bank making money based on deposit of?
Yes, Ron, and I believe that is the number of our submission, that is the nature of the banking business. So it's taking deposits and taking loans. And
But then 38(1)(I) says interest on loans are deductible. Doesn't that?
Well, that's what I am submitting, that not in that sense. What the bank is doing when it takes a deposit, it's not taking a loan per se. What it is doing is taking a deposit on which it is paying an interest, and that is the cost of doing its business and hence the cost of sales. So in terms of that Section 39(1), which excludes that in terms of deducting that amount that you've paid, but what it does do, or does allow for, is where you have taken what I would say an actual loan with terms and conditions and which you may default on, and there's a specific interest rate paid. That is what you get your deduction from, not the banking activity of actual banking.
Before we get much further into the weeds of this, could I just ask in relation to this general point, cost of sales, before you move on, and we don't have too much time for you to do that. Counsel opposite made a lot of the issue as to when the court can properly engage in dynamic interpretation of a term. Just to be clear, your response to that is solely that this was the approach taken by the commissioners. And because it was the approach taken by the commissioners, these are specialists in the field, we ought to respect and follow their guidance. Is that your response?
In sum, that is my submission, because the appellant is essentially saying they've given a new meaning to this. Our submission, no, they haven't. The tax commission, who are in a position to know, says every time the Tax Act has been applied in relation to cost of sales, this is the meaning that we've attached to it. And it includes interest expenses, and that's what we rely on, what they would have submitted at paragraph 57 of their decision. And unfortunately, the High Court judge disagreed, but the Court of Appeal, the 3 judges, all unanimous, said tax commissioners were correct. Their assessment, and it's our submission, that is a finding of fact. Pure fact. Is it, of course, does it include this? And if they are not mistaken, the Special Tribunal is not mistaken on this, ought the court reasonably to alter that view as to what specialist accountants would have said it, they understand it to be.
Right, before that. So you're not going to engage in the theoretical criteria that he mentioned as to when it's justified to do that dynamic interpretation. Is there any other major point that you wish to touch on?
Your Honor, grateful for a minute or so. Let me have a quick scan. Yes, I think I do want to make a point. And Your Honor, with regret, and I apologize, that the authority that I'm going to reference was not included in the bundle. It's the William and Scott decision, which I thought was, and it was relied upon in the courts below. And when I saw it, I thought it was the same authority, but there was only one authority on the William Scott. Yeah, let's see, 629.
And you so indicated to counsel opposite that you'd be relying on this?
No, I did not, sorry. But it is his authority. And it's in relation to the William and Scott decision. What is included in the bundle before this court is the Court of Appeal decision, which decided that particular case. And it was an appeal from the board, which was the tax appeal board,
Okay.
similar to the tax commissioners.
I don't see him objecting, so please. Yeah.
Very well. If you just go down to 629. Because it's in relation to the treatment of withholding tax. And in the William Scott decision that went to the Court of Appeal, they said the withholding tax did not apply in the factual circumstances of that case. But what I want to draw from the William and Scott decision before the tax board is what they would have said. I'll go to the end. Hold on, you're going so fast. Yeah, right there. Where it says at page 20 of that decision, and I would read it in its entirety, a case, because again, they, like the Court of Appeal, would have found that the withholding tax was not attracted. But in this case, they distinguished it and says, a case which we found to be of some assistance is I-19 and 20 of 1981. One of the issues determined in that case was whether certain payments had arisen outside of Trinidad and Tobago pursuant to Section 23A, 1B of the ordinance. The evidence was that payments had been made by the appellant to its parent company in Venezuela on their contract entered into there. The appellant was an oil field servicing company, and its parent company had been a pioneer in Venezuela of a gravel packing and foam clean-out technique which had been applied to the appellant's operations in Trinidad. It's important, which had been applied to the appellant's operations in Trinidad. So if you go on. On the evidence, the court held, sorry, I was too far. The services supplied and paid for under the contract included accounting, purchasing, coordinating, design of equipment, feasibility surveys, and supply of technical information. The appellant had also submitted copies of job reports to the parent and had received comments and advice thereon as to whether the method was being properly applied. In providing these services, the physical presence of employees of the parent was not essential. On this evidence, the court held that withholding tax was payable on the transaction, notwithstanding that in the relevant period, none of the parent's employees had come to Trinidad to perform these services. And we are relying on that extract to show that the services that were done, even though it was done outside of the jurisdiction, withholding tax was properly applied because it was for the benefit of the taxpayer in that country.
Counsel, can you just, thanks for sharing it on the screen. Can you point us to the part of the record where this is?
And that's what I was submitting, that this particular reference.
Oh, that reference?
Yes.
So it's relied on by the other side, but this particular reference isn't in the
They
record?
did not include it in the bundle, but it
Okay.
was previously relied upon in the courts below. And I took the William and Scott, and it's perhaps my fault here, that when I read William Scott, I thought it was the
Sorry,
same.
what you are reading from is whose statement?
This is the Court of William and Scott decision, and we would like to rely on it. Yes. Yes.
Sorry.
Where they distinguished the facts of that case with what had previously occurred in that case, where the tax liability, well, the liability withholding tax was applied. And we would like the court to consider this particular extract. We would be grateful for leave to share that authority.
Counsel, one quick question, and I'm following it as you were going along. The reference in this case, was this not an arrangement where there was a contract in place for the provision of the service?
Yes.
So the parent had a contract for the provision of the service,
Yes.
and therefore withholding tax was levied on
Yes.
the payment made for the provision of the service.
Yes, so
Are we dealing with any kind of contractual arrangements? Was there any kind of management agreement, any kind of contractual arrangement in place between the branch in Saint Lucia and the head office or the associated subsidiaries for the provision of the service?
no contract was submitted, Your Honor, but the conduct and the nature of the transaction, because again, in the William Scott decision, what was important was the substance of the transaction, what was its nature, and what was the conduct between the parties as to what was being provided for by virtue of the payment and where it was moving. And this was the authority for where was that payment sourced. And it is authority for the proposition that even if the service is performed outside of the jurisdiction, withholding tax is still applicable because that service was done for the benefit of the taxpayer in that country, and so it could properly be said to have been sourced. I think I would make some brief remarks in terms of the International Computers Limited decision and distinguish it from what the facts of this particular case. And it is our submission can be differentiated on two main points. Firstly, that this case dealt with the assessable income of the taxpayer, meaning the branch itself. It didn't deal with the liability of the head office in terms of the payment that it received. And secondly—
You're talking about the International Computers Authority that your colleague relied on.
Correct, yes. And I'm simply saying it does not apply in this case, because firstly, that case dealt with the assessable income of the branch itself, not with the liability of the head office. Secondly, that it dealt with reimbursements based on the evidence that was put before it and where it was determined that these reimbursements were for administrative expenses, which is not the case here. What the factual findings by the tax appeal commissioners and the courts below were that these payments were for management services, not for administrative expenses. And therefore, the International Computers case does not apply to the facts of this case. Let me just again take a minute. Your Honor, we would like, therefore, to rely on our submissions. If we have not addressed Your Honors on a particular point, and if I can assist the court any further, these are our submissions.
Thank you very much, Counsel. I see no further questions. And Counsel for the appellant, did you want to take advantage of a reply now?
If we could have a short recess, I would appreciate it.
That's good. A short recess. Bear in mind it's almost 2 o'clock, so we're coming up on lunch.
And there is a factor of digestion and so on to consider.
I'm in the hands of the court. I mean, I can proceed.
As the President said, so.
I just wanted to organize my thoughts.
Okay, so we'll adjourn for a few minutes, let you gather your thoughts and return.
Much obliged.
Okay, thank you. And in timing your response, I'm sure you'll take into account the comments we made before the break. Great. Thank you.
Just a few comments. Let me take you to 1810 of the bundle. This is a quote from the House of Lords, the case of Ransom v. Higgs. The first sentence of the second paragraph is all I really want to refer you to. It just says that the meaning of a word or phrase in an act of Parliament is a question of law, not fact. I'm just saying that because I believe my friend had stated in his submissions that it was a question of fact, cost of sales, and maybe it was management charges. But it's not.
I thought he said that the definition had been given of management charges, and having been given the definition, it was then a factual issue as to whether a particular item fell in that definition.
Oh, I'm not sure. Maybe I misunderstood my friend, but I believe on the record the definition wasn't given at any tribunal, at any level of court on what management services were. It was just a finding that was made, and that's actually a large part of the submissions of the BNS why we're unsatisfied with the decision.
Fair enough. I think he was talking about management charges, not services.
Right. Okay. I wanted to, on the cost of sales, just briefly, I wanted to reiterate that the tribunal found specifically that cost of sales did not apply to banks. That was submitted in our initial, but I believe my friend had said otherwise. I just wanted to clarify that this was actually a finding that was made. And this was, again, at paragraph 61 of their decision, EB 90. A short point. So just to confirm, it is a technical term historically, and the tribunal itself recognized that. Just a short point on the interest expense with section 38(1) sub I. I suppose the point here is that there's a number of different ways that interest can be an expense for a bank. And should Parliament have intended to cover it, to exclude it, should I say, there ought to have been it needs to be drafted in a much clearer manner. And again, so this is just part of the concern with the broad brush approach used to cost of sales and to define it in the manner that has been said. On withholding tax, again, and this case is in the bundle, the Weyhauser case, it makes clear that income needs to be of an income nature. Now, in listening to the conversation today between my friend and the bench, my friend has kept a focus on a benefit from the perspective of the payer. My friend actually, in his Halsbury submission, I don't have it before me, but he quoted and then stopped at the line where it says you must look at it from the context of the recipient. And if we think about it intuitively, that makes sense when we're talking about withholding tax being a tax on income. You have to look at it from the head office perspective. Is it income in their hands? And that very quote in Halsbury's makes it clear that that's what your focus is meant to be. It's not the focus from the payer's perspective. It is from the perspective of the recipient. Sorry, will you give me the page reference? Oh, sorry. Okay, because I would take you directly to it. So I just wanted that, and again, and that ties into the whole consideration as well of the question that's been asked, which is what a charge is and so on. Subjectively, what was the head office doing? What is its perspective on this? And then one has an appreciation, because again, from the payer's perspective, it could be it's a benefit to them, but but it's still meant to be a payment of income. And again, that's why I also provided beforehand Section 116, because just to make it quite clear, and even if one even goes into Schedule 3, into subsection 2, you realize all the aspects there actually ties payment to income, and it's not the income of obviously the payer, it is income from the recipient's perspective. So this has to be borne in mind. When one bears that in mind, then the distinction between a reimbursement and income becomes crystal clear, because what a charge is and that issue becomes crystal clear as well. And again, I did briefly refer you to the case of State Farm in the bundle, because State Farm goes into that. In fact, at one point in time when they were kind of discussing a similar kind of issue, the learned judge in that case said, well, let's look at it. Like, what were they really charging you for? Was it the service? How did they compute it? How did they calculate it? And the logic was, words to the effect of, if it truly was to get back a cost, it's not a charge for a service. Was it tied to the value of the service? Now, that's what I'd say. I would just say I would refer the court to that decision. The State Farm case. Just briefly. So my friend did say that almost that there was a mischief, and that is the reason why certain things were done in the Act. I'm not sure if that includes the definition of management charge, but to me, that kind of confirmed the point that I was saying, that there's this suggestion that as long as it is a related party transaction, that it's a management charge, but there's nothing in the definition that says that. But that right there reveals the revenue's perspective. Now, I wanted to show a comparison of how the management charge provision has been changed in other jurisdictions. And here we have it on the screen. So after 2006, we have Trinidad and Tobago. This was the original definition, and this existed in Saint Lucia. Post 2006, Trinidad changed it, and you can see head office charges are put in there, right? Now, if we look at St. Vincent, you see head office charges or allocations of shared costs are there. And as we know, St. Lucia did not do that. Now, I would also want, if you are able to, there's in our bundle, there all of St. Vincent's. In fact, I think it will be 1289. Let's go to 1289. I'm glad to see it. The reference is there. Right. So it's very interesting if we look at the St. Vincent example. I lost my page reference. I apologize. Right. It's right. If we go to page 1296, and again, this is what St. Vincent has done in their Schedule 3. Look at paragraph B of 10. It inserted on their equivalent to Schedule 3, after income nature, it added reimbursement of expenses. In other words, even St. Vincent recognizes that they changed their definition to capture head office expenses, and they changed simultaneously the provision on withholding taxes to ensure that you would treat a reimbursement of expenses as income for the purposes of their acts. What my friend wants this
Counsel,
court...
1 second. Could you just make sure we have on the screen that other part? What I was seeing was the definition, but not the other part.
Right,
please.
it's at page 1296 of the electronic bundle. $12.96.
Can you reimburse yourself?
If we are engaged, once again, in the statutory fiction, we're engaged in this, we must stay within it,
And the statutory fiction is that Bank of Nova Scotia is one corporate entity. We do not have Saint Lucia as a separate corporation. It's not a member of, it's not a subsidiary company in its own.
But that also confirms the point that it's not of an income nature.
You make the point about looking at it from the recipient's perspective. I don't want to detain you. I know we want to go for lunch. So we want to, if you looked at it from the perspective of the recipient, it might get us where you think we should be. If it is that the Bank of Nova Scotia is operating in Saint Lucia, not as a separate corporation incorporated in Saint Lucia, but as an external business that's been allowed to register and operate in Saint Lucia. So it means it is Bank of Nova Scotia, Canada, that is operating as such in Saint Lucia. In doing that, doesn't it then, the Bank of Nova Scotia, Canada, subject to itself to the taxing jurisdiction of Saint Lucia, because it is carrying out business in Saint Lucia? Assuming that's one way to look at it, would the Saint Lucia revenue authorities then not be entitled to be looking at what Bank of Nova Scotia is receiving as a recipient of the funds being sent to it? And if that's the case, would any understanding of income to mean what comes in, all receipts, before deductions and allowances are applied, not be a matter of interest here that needs to be resolved?
Unfortunately, I pause because I'm not entirely sure I understand the question. Now, I'll just say what I understand, and also take it in what my friend has said. So Section 76B, 1B, has again created a situation that a branch can make a payment to its head office. My friend expands that to suggest that, it's almost like they're the same, that they're two separate people, and therefore and so on. So going along that logic, what I'm saying is that you can notionally then have a transaction between the two. So we're not saying that potentially you can't. I suppose what we're saying as a matter of fact in our case, because again, those circumstances you've mentioned are the same circumstances in international computers. What we're just saying in this case is it wasn't for a provision of a service in our specific case. So I'm not sure if I've answered your question.
I'll help you. You
Okay.
said we need to look at it from the perspective of the recipient.
Yes,
And I'm saying here, the recipient will be Bank of Nova Scotia,
right.
Canada, right?
Yes.
And then is St. Lucia taxing authorities not entitled to tax Bank of Nova Scotia, Canada, because of the business it is doing in St. Lucia?
Oh, but they are
Right.
by virtue of taxing the branch.
Fair enough.
Yes.
But not just by virtue of taxing the branch, but by virtue of saying, well, we allowed you, or the jurisdiction allowed you to come into our jurisdiction to do business. And in doing that, you've exposed yourself to our taxing authorities, even though you are in Canada. That being the case, we will be looking at what you are receiving in Canada
Okay.
from our
Right.
jurisdiction.
But that interpretation, which is why Section 8 is so very important to this analysis, because by that interpretation, now you have a non-resident taxable on their worldwide income. And we've already said, like when you go through the classes of taxpayer, where you have...
Except that it's not from worldwide income, it is income from St. Lucia, from the jurisdiction.
Right, but how St. Lucia taxes income from the jurisdiction for the branch is, it's the net basis of taxation. And Section 8 says, if we're applying the source materials, the source provisions, there has to be a nexus between the income, which is our point, which is why we are saying, in terms of these payments, if you look at the character of them, and the W.H. Scott case actually is applicable on this. I now realize my friend was quoting something within W.H. Scott as opposed to W.H. Scott itself. That case says if you're doing something outside of the country in the ordinary course of your business. So, for example, if you're making a payment to some electricity company over there for some property you have over there, it has nothing to do with Trinidad. You do not tax it. And now, sometimes it's difficult to apply to see when we cross the line. I mean, that's what law is about. So there's these gray areas and to discern. But essentially, that is what it's saying, that you have no jurisdiction. So if we are looking at the head office, what we understand is that when it has a sufficient nexus in the country or a physical presence, then it's a permanent establishment and it gets taxed on its net. Now, but if we're treating the head office, though, as a non-resident insofar as its relationship to the branch is concerned, we look at it from that perspective, then it is entitled for you to treat it exactly as in the example I've just given you, and therefore to understand that there could be situations that the income does not arise within the jurisdiction. So it would be quite unfair, really, to look at it from the perspective of you must tax the branch like any other Saint Lucian, and then say, on income arising outside, well, I'm also going to treat it as just because you have the branch. That is why they ring-fence the branch.
But Saint Lucia is not asking Bank of Nova Scotia, Canada, to give it withholding tax for payments that Bank of Nova Scotia in Malaysia made to Bank of Nova Scotia, Canada. And that makes all the difference, doesn't it?
No, again, though, it's not a matter of because there is a benefit in Saint Lucia that is the reason why there is a nexus. Because again, I've even given an example just now. If you for whatever reason you've paid some other company in Canada for electricity, well, that doesn't just automatically say, well, Saint Lucia is entitled to it. Because, or let's just say there is some service, a Canadian law firm or what have you, and you just ask them to register something for you in Canada. Well, that is Canadian income. It's not Saint Lucian income. If on the other hand there is some type of a contract on island or something again that kind of is more of a gravitational pull towards Saint Lucia, then yes. So again, I think that's also why again. We must look at everything from the perspective of the recipient. We must consider, again, the sourcing principles that were said in William H. Scott. And then what is interesting in this specific case, and I believe it is at paragraphs 15 and 17 of the High Court decision, William H. Scott said, if it was outside and in the normal and ordinary course, then it's not sourced. She didn't say that, but I'm saying William H. Scott says that. But on these facts, that exact language was found by Justice Snack at paragraph 17 and 15 of her decision. She found that as a fact. So if this court does agree that source is applicable, then I would invite you to look at those paragraphs because that finding is critical, that the nature of these specific payments would not arise based on the William H. Scott precedent.
Okay. Counsel, do you wish to continue, or you think you have exhausted us now before lunch?
I too am exhausted.
Thank you. Okay, well, thank you both very much for this very interesting discourse in a very complex area. We appreciate your contributions. We will, of course, take time to consider our decision, and then when we're ready to render it, we'll let you know. Thank you very much.
All right.